equity market. In current financial year, the equity market has already raised 2 trillion rupees. Unique investors have crossed 135 million, up from just 38 million in FY19, indicating their confidence in our markets. However, our investor survey shows that while 63% households are aware of security products, only 9.5% have invested yet. Moreover, 80% households remain risk-averse, reflecting the fear of loss. Therein lies our opportunity and our challenge. There is a deep well of domestic capital waiting to be deployed, and I urge the industry to take advantage of this opportunity. Raise capital, create value for all stakeholders, and help define our economic future. On our part, we have and will continue to streamline the capital raising process. The IPO listing and rights issue timelines have been shortened. The recent proposals for a skill-based approach in minimum public offer size and calibrated MPS timelines, consistent with market absorption capacity and liquidity, will enable and encourage more listings. The governance framework for MIIs has been strengthened, ensuring that public interest is given first priority. Derivatives play a vital role in price discovery and risk management. We have taken several measures in a phased manner to address some of the challenges posed by this segment. Going forward, our approach will continue to be data-oriented, calibrated, and consultative. The block dual window has been reviewed comprehensively, with changes made to price bands and to the minimum order size. We are also committed to introduce closing auction framework soon, aligned with other global jurisdictions, but suitably designed for our requirements. We are focused on deepening our cash equities market to spur capital formation. An active securities lending and borrowing scheme is critical for improving price discovery and facilitating interlinkage between the cash and derivative segments. From a borrower's perspective, it facilitates the settlement of securities sold short, while lenders can earn a fee on their idle securities. The framework for short selling was introduced in 2007 and has remained unchanged since then. Further, the securities lending and borrowing mechanism was introduced in 2008 and modified a few times subsequently. However, this segment remains significantly underdeveloped as compared to other jurisdictions. We will soon form a working group to comprehensively review short selling and the SLBM frameworks. The mutual fund industry AUM now exceeds 75 trillion rupees. Monthly SIP flows of over 250 billion rupees show that awareness about disciplined savings and long-term investing is taking deeper roots among Indian households. Yet, SEBI's investor survey underlines that despite high awareness of mutual fund products, which is about 53% households, the penetration remains low at 6.7%. The AUM of mutual funds is still less than 25% of our GDP, where they are over 80% of GDP in many advanced economies. Huge opportunity lies in deepening this penetration. Moreover, financial inclusion will remain incomplete unless women are equally represented. Towards this end, we have revised the incentive structure for distributors to onboard first-time women investors and new investors from beyond the top 30 cities. The challenge lies in ensuring that there is no mis-selling. Mutual funds must be products that retail investors can trust. We have worked with AMFI to strengthen the monitoring mechanism for mis-selling and misconduct by distributors. Corporate bonds outstandings have increased with a CAGR of over 12% from 17.5 trillion rupees at the end of FY 2015 to about 54 trillion rupees as of September 2025. During the current financial year, around 5 trillion rupees worth of bond issuances have already taken place. Several initiatives have been made to develop corporate bond market further, such as mandatory electronic book provider platform for debt issuance of 20 crore or more, reduction of minimum face value to enable access to retail through online bond platform providers, and liquidity window to provide option to exit before maturity. However, much needs to be done to deepen the market and improve secondary trading and liquidity, especially in the area of retail investor awareness about the debt market, which is much municipal bond market as well as market for green, blue, yellow, social, sustainability linked bonds have been enabled through regulations. They are still at a nascent stage though, but have a potential to take off. This brings me to one of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI survey points out. Our response has been on multiple fronts. We have launched a dedicated awareness campaign, SEBI versus Scam. We are actively monitoring social media for misleading content, with more than 1 lakh such items being escalated for taking down. Stock exchanges have been mandated to publish a regularly updated list of whitelisted broker apps on the website. We have also recently launched the utilities of valid UPI and SEBI Check, where investors can easily verify the authenticity of bank accounts or QR codes of SEBI intermediaries. This is one of our major initiatives to combat cyber frauds. Let me highlight some more data from our investor survey. 22% of aware non-investors intend to invest within the next year. 36% of investors possess high or moderate knowledge of the securities market. Urban participation at 15% is significantly higher than rural, which is at 6%. 37% of those surveyed are not aware of securities market products. 27% of non-investors don't know how to start investing. Our challenge is twofold. First, to bridge the gap between awareness and action. Potential investors are being held back by risk aversion, perceived complexity, and a lack of trust. Second, there is an opportunity to bring new investors into the fold of responsible investing. SEBI's investor campaigns going ahead will cover multiple formats: digital, multimedia, physical interaction, and multiple languages to build a new generation of informed, responsible investors. Our regulatory stance of optimum regulation is aligned towards making our markets future ready. We believe in smarter and forward-looking regulations. In the past few months, several reforms have been taken for ease of doing business with due regard to risk management. We are already simplifying and updating various regulations. The comprehensive reviews of stockbroker and mutual fund regulations are underway. We are soon going to take up a similar comprehensive review exercise for LODR 2015 and settlement regulations. Ladies and gentlemen, SEBI's regulatory stance is clear. We are first and foremost the guardian of trust in our markets, but we are also a facilitator of capital formation, enabling both investors and enterprises to participate with confidence and with ease of doing business. Thank you. Jai Hind.
Thank you, sir, for setting the tone with such inspiring words. I would now request you to stay back on the stage for a special conversation with Lata Venkatesh from CNBC TV18. Thank you very much, Mr. Pandey. That was an extremely perceptive speech, because some of the questions I prepared have already gotten answered. That clearly indicates a regulator who is ahead of the curve, who is able to answer questions of the market even before they are put to you. But, well, one subject you obviously didn't touch because the consultation paper is just out, and that is on the brokerage cap that has come along with the total expense ratio rules for the mutual funds. It is still in discussion stage. So we thought we would get some initial thoughts from you. There is some angst over the brokerage fee cap coming down from 12 to 2 basis points. You pointed out that 35% of the people surveyed are interested in markets. We think that the brokerages and their analyst community do a lot of work in educating. I mean, okay, GST cut has been announced. How does it impact FMCG companies? How does it impact car companies? Where should you invest? So, if you cut it down, the fear is that the analyst community may shrink. So are there any further thoughts? Is it open to discussion, or, you'll do away with the cap itself?
I think when we put out something on consultations, it's not with a view to just inform. Consultations mean actually sincere consultations, where we put out certain facts and elicit responses from a variety of participants, market participants. We are actually basically reconciling. There's investors on one side, there is industry on the other. Jointly, they have to work together to develop the industry, which has already gone, your mutual funds have gone 3 times for the last 5 years. So therefore, what we really need is, we have to really expand this 130 million unique investors, doubling up in the next 5 years. Now, if you have that sort of thing, obviously you need to look at the investor's point of view, as much as we will also like to reconcile it with the industry point of view. There is a scale benefit. And how much of that scale benefit can come to investors? And so therefore, when we put out a consultation paper with certain facts, I think different participants do come back to us with their views and with rationale. And then we are able to look at it, this is not a decision, but this is certainly food for thought for everyone to comment on this. And this, to my mind, is a very good process. That means we don't really decide something sitting in our rooms just like that. We need to put it to wider public consultation, have wider views, and therefore the decisions that we take are not only there is a more buy-in, but also there is a better decisions that we are able to arrive.
Fair point, sir. Actually, every word you say, resounds even with a person like me. CNBC-TV18 has huge many rules if I have to invest in stocks. So I stick to mutual funds. And therefore, if you're bringing down the cost for me, it is to my advantage. I'm not denying that. But the other side, which we are, getting to learn from industry, is that if mutual funds are allowed to pay only 2 basis points, but there is no cap on an FPI or a private equity or a corporate, then when a mutual fund goes to the brokerage, he's lowest in the pecking order. The brokerage first does everybody else's, and it's possible that they actually get a raw deal. So you're of course coming to serve the investor, but it may not work like that, is one worry of both the broking community and the investor community. Would you want to add anything to that?
I've always said, the consultation paper is out, the people will be actually commenting and giving the different rationale on what we need to do, and we are very good listeners.
Okay. So can we reasonably assume that it will not be 2 basis, but something higher, something in between 2 and 12? Can we go with that hope?
I think let us not speculate.
Okay.
Let the things come out.
Then just a speculative doubt, if you please, or just an intellectual doubt. Why have a cap at all? If that's also a cost, like mutual fund pays a rent, it pays salaries, it's paying a brokerage. Why not include it in the management fee at all? Why give a cap? Very powerful, big mutual funds will probably get it even for 1 basis point. Somebody else gets it for 10, for 12, for 8. Is that even a consideration?
The cap is a cap. The ceiling is a ceiling.
Okay.
So it's not something that, people have to really pay for that.
Okay.
The only thing is right now we're discussing the cap, whether the cap is very too low or ceiling is too low. Okay. And there are 2 points of view. And let's see the cost structure. Let's see the sell side research if there is a problem, okay, which will happen there. And we would take cognizance of different rationales to do that. I think the point is that in the overall situation, this is something which is, this particular point is, I think, probably creating a angst, as you said. But there are other points also, like giving far more transparency to investors, how the costs are split, and also bringing the taxes out of this, because otherwise, you would not know exactly how the tax structure is playing. So there are many important elements, and I think this cap is what you are referring to as a pinpoint from a section.
No, do you need a cap at all was the point that I was raising, because many countries don't have a cap. It's a cost which is included.
I would say that, there are many jurisdictions that we see, but it's very important that the very development of our mutual industry has been done, has been made possible through a well-regulated structure. So what is the right kind of regulation depends upon the country and jurisdiction, its circumstances, its people, the way you are. So something which is happening in US is not simply replicable in India. In many respects, it won't work. And we have shown, like in case of DPI, for example, digital public infrastructure, how is it that India has really got to the top of the global ladder? Because we thought sui generis, and we developed that capacity, and we didn't just waited to copy.
Oh, no doubt about that. No doubt about that at all. We've got a very elite audience over here, and Nigel, my colleague, is waiting by. Nigel, Rhythm Desai has already told us, or at least we leaked, that he will have to question the SEBI chairman, so he has a question.
All right, Rhythm, over to you.
Thank you, sir, for your comments. Is there something that in particular worries you about the Indian capital markets? Something that may give you sleepless nights?
So maybe you want to come in the center.
I think there is no meaning in worry. What means is an action. So there is no need of sleeplessness, because that will spoil your next day.
Worry from foreign investors, sir. this worry always comes when foreign investment or FPI flow lessens into India. You go around asking, and one of the big cribs they have is, you guys charge capital gains. I mean, that's uniformly coming from everybody who comes on the channel. They don't always say it on the channel, but they do tell us. Is there a thought that this could be impeding? I mean, nowadays, the last 3 of the last 4 years, we've seen outflows. So is that a thought?
First, that question is addressed to the government, not to me,
Certainly.
because it's a revenue issue. The second, we also cannot have a correlation like the way you are drawing, because this has been there for quite some time.
Decades.
And there was a time, when we had very heavy flows despite so-called capital gains tax. The third, the way the FPI works is quite differently. It is basically a relative space. It is not an absolute space. You have your funds, you have a mobility, and you can really maximize your returns. You can in and out, and different jurisdiction. India is not the only one. We are not our world. The world is much bigger, and there are different jurisdictions, and people keep looking at different opportunities. The actions of the Fed Reserve, they also look at their profit opportunities, they look at P ratios, relative P ratios, and so on and so forth. All I can say is I have had massive amount of interaction with FPIs and foreign players.
I
Banks,
told you the same thing.
FPIs, and not only in India. And every time, I get an opportunity, I talk to them and meet with them. And I have gone out and gone to US, I've gone to Paris, gone to UK, gone to Singapore, Hong Kong, and talk to each one, like every segment. So the sense I get it, there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it. When this tide will turn, whether it will so much as come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows, but sometimes inside you will see there is a lot of movement into a primary market. And these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is we are not. In fact, we are now much stronger in terms of our domestic flows as a counterpart. 18% of individuals in India today own the 18% of NSE listed companies is owned by individuals today. And then you have domestic institutional investors. So the FPIs, in fact, are now a little bit subordinate to the domestic
highly subordinate now, sir.
Domestic institutional investors, but they are very much there. See, you are only taking a flow, but if you really look at it, it's still a $900 billion market cap that the FPIs hold in India.
That's true.
Right.
Nigel, I
Right.
believe. Okay.
Right. So Nigel, I was just listening to your opening comments as well, and it's heartening to see media and all the big names over here as well. We're developing an equity cult, and many years down the line, this will be the foundation. That being said, last evening we got comments coming in from the finance minister, and she said that the F&O market will not shut. Now, the street was reading it in various ways, but I want a clarification on that front. Does it mean that weekly expiry continues for now?
Well, I think on this I've said, because I don't have to actually give a statement every second day. I just
It's
spoke
just that removing weekly, is it off the table?
I just spoke the other day. We are looking into a consultative database. We are normally, you would think that you build the market, and if you have problems and imperfections, if you have distortions, we try and fix it. I mean, this is a normal thing, you have something happens in your body and all that. I mean, you don't really just at the first instance go and remove it surgically. I mean, this is something which you have to see, how do you take it? And therefore, our approach will have to be necessarily calibrated, data-based, and see how the problems, distortions in the market can be taken care of. There are multiple solutions to a problem. There is no one solution to a problem.
Okay. Nigel, I believe Sridhar Shivram also had a question. We are running out of time so quickly.
Yeah.
Sridhar.
So my question is on buybacks. For some reason, SEBI has barred secondary market buyback. If you see in the US, almost $1 trillion of buybacks happen every year, and it's a great tool to stabilize the market during difficult times. I would urge SEBI to relook at open market, secondary market buybacks, given that the tender offer has become very complicated now because of the taxation rules. In the entire last year, we've had only one buyback. So I would urge SEBI to relook at the entire buyback, ban. Thank you.
Can we have hopes that open market buyback will come?
We will look. We are open to all suggestions. We will examine.
Nigel? Okay, I believe we are running out of time, sir. So just very quickly, should we assume that the ban on weekly expiry is off the table?
Please don't try to put words in my mouth.
Okay.
I think I have said, enough on this subject, and I think let it rest, because I think this is also not right for the media to, because we also need a certain stability of thought and stability of action. I know you have your own requirements, that you have to be newsy, you have to discover something which is very
So
exceptional.
we are only looking for certainty, not news.
Yeah, but if you are looking for certainty, the certainty currently is that it's on and it is working. And next time, if we have to take any further steps, we will come out with a consultation paper, which you will get to see. I mean, Lata will be the first one to see that consultation paper. I'll ensure that.
So we'll get it on the website. Thank you for that. So just final question. Are there, what is the next step in Jane Street? And are you all still investigating? Are there likely to be more such high frequency traders whom you will pick?
See, as a matter of our policy, we don't discuss individual cases in media. So
Okay.
my apologies.
Okay. Thank you, sir. Thank you very much for patiently taking all our questions and that of our guests. We're really grateful that you inaugurated our second Global Leadership Summit. Thank you, sir. So I'll take the mic.
Thank you, sir. Thank you, Lata. Thank you, Nigel. Shireen, I see you with a robot right here. Oh, he's come here to welcome Mr. Pandey. Ladies and gentlemen, a huge round of applause for our robot here who's welcoming Mr. Pandey.
Now it's shaking. and giving you a high five and waving out to you. So we've, in the era of artificial intelligence, it's
Program it for Namaste.
good suggestion. We will program it for Namaste. But thank you very much to Mr. Tuhin Kanta Pandey for joining us. Ladies and gentlemen, a big round of applause to the SEBI chief for joining us here this morning. Want a picture?
Now, before we move ahead, I'd like to let you know that we have an exciting session coming up in some time with Oliver J., Managing Director, International Strategy, OpenAI. So stay tuned for that one. Now, everyone's talking about the India decade, but here's the real question. Where should investors actually put their money? The opportunity is clear, but so are the challenges. Valuations are stretched, global conditions are uncertain, and the risks are real.
So how do we navigate that? Our next session explores this in depth, and leading this conversation is Prashant Nair from CNBC TV18. And joining him are the distinguished voices who live and breathe the markets every day. Please put your hands together for Rhythm Desai, Managing Director and Chief Equity Strategist for India at Morgan Stanley, Sankaran Narain, Executive Director and Chief Investment Officer at ICICI Prudential AMC, Neelkant Mishra, Chief Economist at Axis Bank and Head of Global Research at Axis Capital, and Ashish Chauhan, CEO of the National Stock Exchange.
Prashant, it's over to you.
That was a really enlightening conversation with the SEBI chairman. And I'll come to some of the points he made towards the back end of the conversation here with all of you. And like to, I mean, on the mutual fund distribution side, he said, well, we're good listeners. So it's cryptic, right? I don't know what, Naren, you make of it. I'll ask you that in just a bit. But good morning, all of you. Thanks very much for being with us here at the Global Leadership Summit. It's not every day that you get four of the sharpest minds in India's market ecosystem on the same stage at a time when the noise is loud, the flows are AI, Atmanirbhar India, and the opportunity set feels both extraordinary but also quite complex. I guess all of you would agree. Now, the India equity story has had many headlines, and I'm just talking about the last 1 year. I mean, in recent times, returns have been more subdued than usual. The Nifty and the broader NSE 500 has been flat for about 14 months now. Foreign investors have been big sellers, with domestic investors on the other side of that trade. Very large equity supply via exits, IPOs, and of course, I mean, India getting little love from President Trump in the US. Hopefully that will change. Looking ahead, many are waiting to see if government policies like tax and GST cuts, and of course, RBI's rate cuts will provide a durable bump to growth in markets. The question is, how will all of this resolve itself going forward? And that is what these four gentlemen will do, for you here on this very, very interesting panel. Gentlemen, once again, thanks very much, all of you. And we were just joking outside that Naren, I think, said that I'm here to balance things a little bit. If Rhythm, who's the big bull on the equity analysis side, gets too excited, I think Naren is here to temper some of that enthusiasm. So Ashish Bhai, great to see you as well. Ashish Bhai, of course, heads the NSC. It's one of the largest companies now, and hopefully we'll see an IPO soon as well. But let me just stick with markets first up. Rhythm, where are we in terms of this cycle? Let's just place ourselves where we are.
See, first I have to acknowledge that Naren has been dead right and I've been dead wrong. So we should get that right of the way. I think he was warning, if I remember correctly, first time last year in September, that things are getting tricky. And well, they did. So India has, and I think the SEBI chair made a very useful point about foreign investors who, unlike domestic investors, see things on a relative basis. China announced its first round of stimulus September last year, and that eventually proved to be India's peak relative to emerging markets. And we've had the worst year for India relative to EM in 30. So it's not been just another year. It's not visible in absolute share prices because the world is in a raging bull market. Markets like Korea up multiples of 10 percentage points in the last 12 months. So that's the extent to which India has underperformed. The proximate reasons are known to everyone. Growth slowed down. The starting point of relative valuations especially were very high. And we've seen both of these, I think, correct or inflect. The RBI started working on the growth cycle in February, and we have arrived at a situation where it seems to be in reflation mode with a view to increase CPI. So that should help nominal growth going forward. India's relative valuations have corrected a long way, and we're now actually at levels which we don't see very often. So India does look far more appealing as a market to foreign investors. And the final point is that in recent months, the focus of global tourist capital, the one that looks at short-term returns, has been on AI. And India does not really offer an AI trade. So ultimate trigger point for the return of the FPI will be if the AI trade starts fading. I think India will suddenly start looking very attractive. And the final thing is on the trade deal. While I don't think the trade deal with the US is that critical for India's macro, in the minds of short-term capital movers, it does seem to be an important thing. And hopefully later this month, that trade deal happens, and that will again be another negative out of the way. So as I see the landscape, I think things look like they are about to turn for India on a relative basis. The risk, of course, remains that the world could wobble. and that could make it another tricky year for absolute returns, but I'm hoping that that risk doesn't pan out.
Well put. And that AI point that you made, Rhythm, right? Chat GPT, I think, came out in November of 2022. I think the opportunity size crystallized maybe in 2023, and it took off after that. Before that, 2021, 22, and maybe parts of 23, we used to say Nifty and the NASDAQ are so closely synced and they were the best performing markets in the world. And that broke, as you said, because maybe there's no AI trade. But that's very, very stark in that sense. Naren, come in here. What is your sense? Rhythm's view is gets better from here on a relative basis, not a raging bull market or anything, but gets better relatively.
Look, clearly on a relative basis, it gets much, much better from here because India has underperformed so much every other market in the world that it gets relatively better. The problem is on an absolute basis across the world because today every market in the world is very costly today. So how does the absolute markets behave from here is possibly we don't know. If you had asked me 1 year back, would US also correct? We maybe would have said US would correct, but that call went completely wrong. So I think the risk is something going wrong in US AI stocks, because if US is 60% of the global index, how do you expect India to go up when US is going down? So I think the challenge is US market. In India, what the Indian entrepreneurs, the Indian private equity firms, all they've done is they've ensured enough supply. So even if we get good SIP inflows, they have ensured that there's so much supply that the market just cannot go up easily. I mean, there is so much supply and there doesn't seem to be any end to the supply. So, I mean, although we have a very, very big investment team, all the time we are trying to see how to handle every day there's some block or the other. So most of our time is spent in analyzing whether we should buy this block or this participate in this IPO or this QIP. That there doesn't seem to be any way the market can go up till this supply ends. And we're not able to see when the supply ends. If I can say, okay, it'll end, maybe it will not be there in December. So December markets can go up because supply doesn't happen in December seasonally. But otherwise, again, Jan to March, there'll be supply. So that's where the challenge is at this point of time. So we are in a situation where it's tough to argue that you can make big money. You can't make big money, but at least on a relative basis, the problems doesn't seem to exist at this point of time. But on an absolute basis, we don't know. But at any point of time, markets can correct. And I think, we look at a global guru like Warren Buffett. He has created the highest row of cash at this point of time ever. And, he's the only person who doesn't care what happens in the near term. He doesn't have any performance risk. He doesn't have any risk that anything can go wrong just because he's underperforming. So I think what he's doing suggests that there is enough risk of US markets correcting.
And that's the big risk to your mind, right?
Yeah, that is the biggest risk.
We have, by the way, as we were just saying, OpenAI on stage, I guess after this panel, maybe after panel after.
I think the risk is not AI doing badly. The risk is AI stocks doing badly. It's like internet. Internet didn't do badly from 99 to 2010, but still internet stocks crashed between 99 and 2002.
There has been enough mainstream sell-side research which is now comparing and asking the question with a question mark at end, whether this is the 99 moment. And most of the answer to that in those reports is no, this is not. And this is why it's different. Point 1, 2, 3, 4.
But they'll say this time is different.
But do you think, I mean, just to that point, this is something similar to, you've lived through that.
I don't think we can say with certainty. We are not part of it. All I'm saying is the sentiment. If you look at the kind of vendor financing which is happening, X supplies to Y, then say Y goes up, then X doesn't have money, X gets money from A then gets money from B. If you look at what is happening, it is very worrying. But do we know with certainty? I don't think we know.
But if AI has not helped India, why should it hurt India?
No, that is where 99 to 2001 did Indian markets go down? Yes, it did go down. So now maybe it will go down as everyone says it will outperform. Doesn't mean it doesn't need to go down because the world's biggest market is US. I don't think if US goes down 20%, any market in the world is going to go up.
And across ICICI funds, are you kind of sort of building some hedges?
Yeah,
some-
I think,
is there a-
there it is very simple. We recommend asset allocation and tell people to invest in not only in equity.
Correct.
We have succeeded much more than most people, but that's a risk that the investor is taking. Investor is too fond of equity. After 13 years of 12 years of continuous equity return, they like only equity.
Nilkant, come in here. And it's just the other part of the thing which Rhythm also mentioned is the US-India. Rhythm said, well, it's not that crucial. I remember speaking with you immediately after that, those tariffs, etc., were imposed. And I remember what you said. You said, well, the longer they last, I mean, it'll start to show up more and more. I mean, a quick resolution is, of course, is the best thing, but that's obviously not happening. It doesn't look like it's in the immediate horizon. How do you think about that? And weigh in on markets as well?
Yeah, so that I agree with Rhythm that it is not important for India's macro. It is important for FII sentiment on India. Remember that the whole world is obsessed with tariffs right now. So it does affect sentiment. And if you're sitting in London or New York and you're reading some of these Western business press and you see that India has 50% tariffs and it is struggling, I think the sentiment around India sours. The view on India among foreign investors that I see is not just neutral, that there's no AI, it's actually negative, that India is an AI loser, that Taiwan and Korea are AI winners because they have Samsung and SK Hynix and TSMC and they are beneficiaries of this boom in AI. And India is not just no player, but actually Indian IT and all of the GCCs, etc., will suffer, which I think is very, very myopic. I think it's absolutely disagree with that. And therefore, whenever this AI bubble turns, while I'm completely in agreement with Naren that as the US market from 200% market cap to GDP starts to normalize, that no equity market will be left untouched. But I do think that the roll forward gains in earnings are now starting. So for almost 3 quarters, we had all the roll forward gains, which is 3 to 3.5% a quarter, being offset by earnings cuts. So now I think that GDP upgrades have started. I expect that by the end of this fiscal year, the real GDP number will be upwards of 7. The reason why there is still a lot of negative sentiment is that nominal GDP growth has been coming down. And again, people have been extrapolating too far. So from 18% in FY22 to 8% this year, people think that this is a new trend line. I don't think so. We have been tightening fiscally and monetarily too much. Therefore, core inflation has come down. Food inflation has been falling for the longest period, as RBI has documented. So both of these will reverse. And so we are going to be back to 11, 12% nominal GDP growth in 6 to 9 months. And then the earnings cuts start to slow down. And they've started to slow down. I think maybe some earnings upgrades can happen. And the roll forward gains will start coming through. So I do expect that in the next 12 months, we should see much better support for India. In fact, foreign investors have been hedge funds have been using India as a funding shot, that it's not going to do anything.
Which means they're selling here and then using
Yeah,
that.
so because they know that this market is not going anywhere, and therefore you just sell it, you get free funds, and then you invest punt on that in the AI themes globally. On whether the AI bubble is bursting right now, I'm not so sure, because as much as it does seem really excessive, even on things like code generation, you talk to or you listen to people who have worked in AI, who've done coding, people think that vibe coding is going to replace software engineers. I don't want to make it too nerdy, but there was a time when you actually had to write code in assembly language, and then compilers came. AI, the way it works today in coding, is maybe as big an impact in terms of time and effort as compilers. So it is not really going to transform and replace all coders. So I think even that is becoming excessive. So far, a large part of the capital going in is surplus capital that Google and Microsoft and all those accumulating. Bubble formation and the risk of a collapse happens when you have a lot of credit funded, you have a lot of, so then there is a deadline. So if Microsoft does not make enough money, the ROC falls by 2%. But if you've taken private credit and you fail, so that kind of the share of capital is still low. So I think there's another maybe couple of years of bubble formation, and then it all falls.
So not there yet is your point of view. Ashish bhai, you sit, you could be stoic through this market conversation because you sit on top of the market ecosystem where we all operate, analysts, fund managers, economists, everybody. But I mean, just your thoughts on the first point which we made, which is the domestic investor. And I mean, the numbers are just mind-boggling. Naren put it well, right? I mean, I don't think domestic investors need any equity encouragement. I mean, they're there, they've seen the returns, and they're here to stay in that sense. So while we can complain about all the supply, but it's like chicken and egg, what came first? The supply is there because there is demand in that sense, right? Just wanted your thoughts, Ashish bhai. How do you see things?
I think a time comes in the history of a nation when it starts investing in itself. And I mean, if you look at the numbers in 2014, because that's when Mr. Modi took over, so I have some idea of what the numbers were. Total number of investors in India, unique investors, because we count accounts and also unique investors because we have PAN numbers. So we dedupe and figure out. When Mr. Modi took over, on that day, we had 1.6 crore unique investors. Today, after 11 years, we have 12 crore unique investors. Today, and many of, literally almost half of them have come in last 5 years, largely due to the COVID-induced framework where we were having a KYC framework where you had to go to physical houses of people, check their incomes and all. And then in COVID, because we could not go, SEBI allowed the KYC to be done by video. And that allowed many of my brokers to reach out to the nooks and corners. Today, India has around 19,400 zip codes, give and take few. I have pin codes in every part of India, every zip code except 28. And my understanding is out of 28, probably 25 are, the pin code themselves are airports where you can't do KYC, right? So broadly, I have people in Ladakh, literally 6,000 meters, 7,000 meters on top, and I have people in Andaman. It is amazing how India started shifting from real estate and gold and everything else into equities. And it's a miracle, I would say. Today, with 12 crore investors, 9 crore males, 3 crore women, 25% women. And if you take number of households, it is now literally 9 crore households, even take few, which is 1/4 of India's households. You don't see that type of numbers even in Germany. I mean, it's always said that a poor country, we are still $3,000 per capita. I don't believe we are $3,000 per capita, but numbers say that, so I would believe, right? So poor per capita income countries cannot have a good functioning capital market because poor people cannot save. And if they save, they don't trust their brothers also. How come somebody sitting in Arunachal Pradesh is putting money in a small little company, SME company coming out of Salem in Coimbatore? That person is never going to visit, check out what is happening, but she has a tremendous trust. Her 1,000 rupees is important to her. Don't think you talk billions and trillions. Her 1,000 rupees is important, but what I call a virtuous cycle has been created by all the past companies which have given results. And broadly, today, I mean, although people don't talk, Indian equities market with $5.3 trillion is probably 160% or more of Indian entire banking system. It is amazing what has happened that people are investing in risk assets. And also it tells you that over last 11 years, India has become more middle class. Whatever data tell you that India's poverty has not reduced, this, that, but 25% of households are now rich enough to invest in stock markets. It is unbelievable progress.
No, absolutely. And I think that point that the suite of access to, because of UPI, Aadhaar, mobile penetration, I mean, access to financial products at that $3,000 capita, I think it's unmatched anywhere in the world. And I think that's a really a miracle. Just a last round of questions. We're eye on the clock as well. Rhythm, on that supply point, right? I think Naren earlier at one point had said that, I think you gave the Naren 95 example, that supply essentially is what overwhelmed the market back then. Just your thoughts on that. How do you think about the supply issue?
So see, Prashant, we are, so the previous peak in supply was about 3% of GDP. Today we are circa 1%. So we have a long way to go. When we get to about 3% at current GDP, it will be about $10 billion per month for 12 months on the trot. So I don't think we have reached a level where supply is going to be the reason why the markets wobble. So I'm not so perturbed about it. It's a good sign. It's a good thing that people are raising capital. It does help the economy, and eventually this will flow into capex and help earnings.
On that AI question, Rhythm, what's your, we got Naren who thinks, no way to tell, but it looks a little scary. Neelkan says it's still a couple of years away before it, to use the word, pops, but your thoughts?
So with the caveat that I don't know, like Naren said, I remember that in the internet cycle, Warren Buffett became cautious in 1996. A lot of smart investors became cautious in 1998. If you became cautious in December 1999, it was still too early because a lot of stocks doubled in the next 3 months. So this is really about your mandate, what you want to achieve with your portfolio. Warren is, as Naren rightly puts it, he doesn't have to report to anyone, including himself. So he's fine being early. Not everybody in this room can afford to be early. Yeah, so when this is always going to test everyone, but we don't know.
Yeah. Wrap up with your, how are you approaching markets in terms of where wealth will be made from here? It's going to be relatively better, but relatively better where, Rhythm?
I think banks look very attractive. Valuations are, in fact, it's the only place where valuations are below history, where earnings are below history, where I think margins are stabilizing, likely expanding, where top line growth looks like it's accelerating. So I think lenders are probably the place to be. The other places in the market, I think, get a little bit more tricky because you have to have some faith in their ability to deliver into the future. IT services, I think, offer an interesting opportunity because the consensus seems too bearish. I agree with the point Neelkan made. It's not so simple that AI is going to, take over coding. In fact, from whatever I know, a lot of the AI work, the monetization of the investments that have happened is taking place here in this country. So it's unlikely that AI is going to. What is hurting IT services actually is the GCCs. It's not AI, because we, for example, Morgan Stanley used to farm out a lot of work to IT services companies, say 5, 7, 8 years ago. Now a lot of that work happens in-house. So the amount of headcount that we have at our vendors has not grown, whereas our internal headcount has grown.
Captive
3x,
centers
5x.
has grown.
So that's really the proximate reason why IT services may be hurting, not AI.
So financials and IT services is a non-consensus.
IT services, you have to have a 2 to 3 year view. I think financials will do well even on a 12-month basis.
Naren?
What we think is it's a mature bull market. So, there have been such good stock pickers in India that anything which has to be discovered got discovered. But a lot of people get
frustrated. That is like the efficient market theory.
A lot of people got frustrated. They buy in 2023, the share hasn't worked for 2-3 years. They get irritated, they start selling. So we found that in many sectors, people get frustrated holding a stock for 2-3 years. They don't get return, they come and sell. So we've been trying to buy wherever we find that the seller has got frustrated with holding stocks. Not like 2018 to 20 was very easy. You buy PS, you buy metal, buy telecom. All those stocks are very cheap. Today, all those sectors are not very cheap, but across, whether it is quality, whether it is many other sectors, you will find someone coming and selling because they waited for 2-3 years, no return, they'll come and sell. So we buy across sectors. And we find like recently we bought oil and gas and we found that it suddenly performed. Now today, if you ask me, is oil and gas the best sector? I would say I would think, because oil and gas has done very well. So we look across sectors at this point of time. But do we expect mega returns from here? For that, we need supply to come down. The day supply comes down for 3 months, this flow comes, our SIP flow keeps coming, then I think we have a good rally ahead. But for that, we can't afford to have this kind of supply coming in the markets. And the difference, what Rhythm said, is maybe 3% of GDP. But at that point of time, FI money used to be double local money. Today, we're having very low FI money. For that, Rhythm has to get FIs to invest as much as domestics invest. Then we can have 3% of GDP. Today, the entire burden of matching what domestic, all the Ps and promoters sell, only domestics are investing. FI has a very small role to play. So for 3% of GDP to be absorbed, Rhythm has to do more work.
There's a good chance that FPIs turn net buyers in the next 12 months.
In the next 12 months.
Yeah,
Okay.
because India will
Then
be...
it can be 3% of GDP.
But with
Otherwise,
FI.
domestically, we
So
can't absorb 3% of GDP.
Now
We're
Rhythm
not
is
getting
promising he'll do
15%
work.
in 12 months.
Now Rhythm is promising he'll do work.
Nilkan, just 30 seconds. Where do you see returns being made from here?
I think financials, construction proxies. I think that hardware tech is, I mean, current listed stocks, the universe is very bullish, but I think the private space, you'll see a lot more investment opportunities.
I had a lot more questions, but as always, we're always limited by time, and it's a packed day through the course of the day. And this is the top market panel that we put together for you. Rhythm, Nareen, Nilkant, and Ashish Bhai, thank you all for joining us here on this session. Thank you very much.
Thank you so much for your valuable insights, Mr. Desai, Mr. Narendra, Mr. Mishra, and Mr. Chauhan, and of course, Prashant. Ladies and gentlemen, a huge round of applause once more for our panelists here. We've been talking about markets and money, but underneath all of that sits something else, the technology that's quietly changing how businesses actually run. AI isn't waiting in the wings anymore. It's already in your supply chain, your customer service, your back office, and that raises a whole set of new questions.
Like what? Well, if intelligence can be embedded everywhere, who wins? What happens to jobs? What happens to India's ability to compete when every country is racing toward the same tools? Our next conversation gets into this, and it matters because we're not debating whether this happens, we're finding out how to make it work for us.
Requesting Shireen to kindly join us back on stage for this conversation with Oliver J., Managing Director for International Strategy at OpenAI, who works with organizations deploying these systems across industry. Huge round of applause.
Ladies and gentlemen, the conversations continue here at the second CNBC-TV18 Global Leadership Summit. You know, we were talking about some pretty awe-inspiring numbers there for the capital markets, but all of that dwarfs in comparison to the kind of investments that are being made in the AI ecosystem. Let me just throw some numbers for you. Sam Altman tweeting this morning saying we expect to end this year above $20 billion in annualized revenue run rate and grow to hundreds of billions by 2030. We're looking at commitments of about $1.4 trillion over the next 8 years. That's just OpenAI, and that gives you a sense of what is happening in the AI ecosystem today. Oliver, it's wonderful to have you join us here at the Global Leadership Summit. Thank you so much for making time for us here in India and joining us here this morning.
Thank you so much for having me.
You know, you've spent a few days in Bengaluru. You're here in Mumbai. Oliver, before I talk to you about India, I want to understand from your vantage point as an insider, how you see 2025. From the outside, many of us believe that 2025 has in fact been an inflection year as far as AI adoption is concerned. How do you as an insider see 2025 from the OpenAI perspective?
I think 2025 indeed was quite an inflection year for us and for the industry. 2025, I'd say in many ways is the year we will remember as the year AI went from the chatbot era into the intelligence era. It's hard to believe that ChatGPT launched less than 3 years ago.
It's your third anniversary this month, I believe.
Exactly, exactly. It's not even 3 years, but soon. All right, we'll blow out the birthday candles, the 3 birthday candles soon.
But
And
happy birthday in advance.
thank you so much. Thank you so much. But when we first launched, and most people experience AI from the perspective of chat, is a chatbot, and it was already this marvelous experience that people have. And incredibly, when you look at what has happened in just such a short period of time, now with AI, AI is not about giving you just responses, helping you with search results. AI is actually doing tasks for you. It's actually completing tasks, is really thinking about what reasoning, right, through like what you really need. And then when we think about ChatGPT, what we're very excited about our company and products is actually moving up the layer now, and really ChatGPT becoming more of a platform. And so you'll see more of that as we
I want to push you a little bit more on this transition from being a chatbot to now becoming perhaps a platform, virtually an operating system, an AI operating system. What will this transition entail, and what can we expect now as far as the future is concerned?
Yeah, well, one thing for sure is I think you're going to see continued rapid adoption. Right? For us, we now have over 800 million weekly active users. Right? You see, we recently crossed 1 million businesses that are adopting our technologies, and so this is just the start. Right? I think when you see our products becoming more of a platform, that just introduces many opportunities. Let me give you a couple of examples. We recently launched an apps SDK. So this is an ability for developers to publish applications in ChatGPT. What that means is a startup like a Zomato, right, can actually build an application and enhance their customer experience by building that experience into ChatGPT and take all their actions within ChatGPT. So what that does for companies, it gives them much more access to distribution, right, and leverage the fact that we are growing our user base, right? And a lot of that is India. A lot of that growth is powered in India.
You know, let's talk about India, because you look at international markets for OpenAI. India, did it surprise you, the kind of adoption rate that you've seen in India? It continues to be your second largest market outside of the US today, right?
Yes, absolutely. The momentum we see in India is incredible. It is indeed, and still will be. I don't know, maybe not forever.
Maybe surpass the US?
Not sure when, right? Not sure if, but I can tell you one thing for sure. We're seeing tremendous growth. The growth in India we've seen it has tripled. It tripled year over year. And so we're seeing a lot of that growth. And what's interesting about India, I have the opportunity to fly around the world and meet with governments and businesses and developers around the world. You're seeing AI being adopted in all facets of society here. Right? I was in Bangalore. We held a developer day there. We had incredible. There's this energy, right, that you really don't get in any other places, where there's a hunger to adopt frontier AI. Right? We highlighted companies like NVIDIA and Eternal and Emergent, and these are developers that are building products that, in their categories, I would say are the frontier of their peers around the world. And so you're seeing massive adoption of developers. In the last couple of days, I'm in Mumbai, and we're having conversations with enterprises and businesses, and they too are starting to go on this journey.
So if I were to read between the lines of what you're saying, you're almost suggesting that India is inspiring OpenAI and the work that's being done at OpenAI. Would that be a fair statement to make?
That is absolutely the case. Absolutely the case. I think what's a couple things that's really interesting for us when we think about India. We fundamentally believe that you build for India, you can build for the world. Right? India is really leading the adoption of sort of next generation. When you think about the population mix between 18 and 24 years old, right, that is a booming sector in India, and we have a very keen eye on how is that population using AI, using ChatGPT.
How different is the Indian consumer versus some of the other international markets, or versus the US in this 18 to 24 demographic? We were chatting before we came up on stage, and I said, My generation still uses ChatGPT more like a replacement for Google. We're still searching on ChatGPT. We're not looking for companionship. We're certainly not having conversations. What about you, Oliver? Are you having conversations? Are you looking for companionship?
Yeah, I think you're right. That the younger generation, right, they're using AI as really a true assistant, and in a couple areas. In India, for example, education, right, that use case is very popular, and we see students using ChatGPT to learn better and drive better learning outcomes. So when we thought about building the product for students, so we have something called study mode, right? What people might not know is we sent our user researchers to India to actually learn, right, from sitting down with students and see how are they using ChatGPT to learn, and that's why we built study mode, and that was the inspiration. It was actually from India.
And what was the big insight from that research that you did here in India that helped you develop and design study mode better?
The insight there is students aren't not necessarily looking for the answers. They want to understand how to get to the answers and really think about what is the chain of thought. How do you actually go through the steps, right? And critically think about how to solve a problem. And so study mode is a very interesting and popular. It's the most popular in India, not surprisingly. It's because it is built where you ask it a question and it won't answer for you. It will prompt you like a real teacher would. Right? So you ask it like be really simple, right? What's 5 times 5? It won't tell you 25. You have to say, okay, here's a pattern, 5, 10, 15, what might be next? So that is that's that user insight that came from India.
You know, speaking of India, you've decided to go free in India. You launched ChatGPT Go, but you've decided now to make it free and accessible to people who want to use it. Why? Did you want to consolidate your market presence in India, continue to build on the first mover advantage, or do you believe that there isn't the capacity to pay at this point in time for the large user base that you want to collect?
I'm really glad you brought up ChatGPT Go. That's another example where India was inspirational for us. So when we listened to our users in India, what we learned was a lot of users wanted access to the frontier versions, right, of AI, but they needed it to be more affordable, more accessible. And so we've made a lot of investments to make sure that our products can be accessible and affordable in India. In fact, just the other day, we announced a benchmark called QA, and this is a first of its kind benchmark that improves the ability for models, not just in terms of the Indic languages, but also understanding culture. Right? We worked with like over I don't know how many hundreds of experts in India, right, to actually help to teach the models, right, to understand deep context, cultural context. That's usually not just black and white answers. ChatGPT Go is another example where we wanted to make it more affordable, and given that our mission is bringing AI, right, the benefits of AGI to humanity, to everyone, that aligns very well with the India AI mission. And in light of the Global AI Impact Summit being held in India next year, right, we wanted to make sure that our frontier models can be accessible to as many people as possible, whether you're a housewife, a student, a farmer in rural India, right? That was the inspiration.
You know, you talked about ChatGPT Go, but you also gave us another number there, 1 million as far as enterprise customers are concerned. And of course, that's a global number. What's the enterprise adoption in India? How do you see the enterprise side of the business growing for you here?
Unsurprisingly, there's a tremendous amount of interest. Right? I think that part of that might come from the engineering strength that we have in India. But I can tell you that the energy and the interest is very palpable. And I've had a very busy couple of days. And a lot of it is because I'm meeting with a lot of enterprises that are leaning in, they're asking the right questions, how to deploy AI responsibly and in a way that really transforms how enterprises operate.
Oliver, globally, what OpenAI has done in this year is sign up billions in deals with various companies, whether it's NVIDIA, AWS, Oracle, and of course, you've seen Microsoft restructuring go through as well. How much of the AI infrastructure ecosystem are you willing to build out and bet on in India? What would be the route to being able to do that? Are you in conversations with the government? Are you in conversations with private players at this point in time? Explain to me what aspirations you have from an AI infrastructure point of view for India.
Yeah, trust me, if it's hard to keep up with the headlines, it's hard for us internally to keep up with the headlines as well, and it's easy to get caught up in it all.
Do you have an agent just tracking all the OpenAI headlines for you?
That is a fantastic idea. I'm going to do that. Good thing is with our technology, I can build that within 2 minutes.
I would imagine.
And I can share that with you. I think the important thing here is understanding our philosophy and our perspective. So based on the trends that we see, based on what we see coming and emerging in our labs, based on, you asked earlier around enterprise demand. Enterprises, workloads, and use cases that AI can transform. So based on all that, we see tremendous demand, tremendous opportunity, and we think the risk of not having enough compute is far greater, right? Far greater than having too much. And so this is really the reason why we're very, very excited that we have, it's not just us, right? That we've been able to build a ecosystem and a coalition of like-minded partners who also see what we see, which is we have to be ready for the future, and we think that that the next couple of years will be incredibly exciting on that front.
While we're talking about what this could mean in the long term, and I think there is consensus that this is going to be pretty transformative in the long term. I think the more relevant question that's being asked today is what happens in the near term to the medium term, and that was being discussed in the previous panel as well. Valuations, are we in bubble territory? Are we close to bubble territory? From the inside, what do you make of the debate on valuations as far as AI is concerned today?
From the inside, we're just laser focused on deploying the AI into companies, right? What I can tell you is the demand is across every sector, every geography, and I can also tell you that these companies are starting to get real value from their investments in AI, and you're seeing this. You'll see this in their top line. You can see this in the bottom. You can see this. We can see it in the projects, right? And I think this is why AI is so powerful, is because it's really the first time with software where the time to value is so short, right? You can think about companies that we work with many companies on on customer support, for example, is a very mature use case now. If you have a B2C company, right, and you swap out the previous deterministic type of models with a frontier AI model, your NPS jump. One of the biggest airlines in the world, their NPS jumped from 40 to 75 overnight, right? And so that's immediate value, increases customer retention, satisfaction, experience. And so that is really why you're seeing this adoption, is because it's not just a tool, right? It really is driving real ROI. And I always tell companies, if you're engaging on an AI project and there's no real ROI, you're engaging in the wrong project. But I can guarantee you, every company, you can find at least 2 to 3 use cases that you should be able to materially improve either top line or bottom line.
You called out customer service as one of the use cases where we have seen a degree of maturity emerge. Which are some of the other use cases that you believe are on the inflection point of being able to deliver the kind of value that customer service, for instance, has done?
Back to my comment around learning from India, coming out of this trip, I am more confident than ever before that commerce can be an incredible vertical, and it can be transformed by AI. I think when
You're experimenting with that already.
we are, and I would say I'm not sure it's an experiment anymore. Like this is I think the future of how people will experience commerce. So a lot of people already come to ChatGPT to learn more about products and ask, understand, do the product research. You know, I'm gifting is not a strength of mine. It's not one of my love languages. And so every time it comes to my wife's birthday, Christmas,
You
anniversary,
outsourced it to an agent.
I'm very bad at this, right? Suddenly I'm not bad. And it's because ChatGPT is such a great commerce partner. It's like a shopping assistant, right? And so it makes a lot of sense that I think you'll see more and more of that use case moved into more AI native experiences, both in our apps as well as in the actual, you know, like in actual partners applications. So I think commerce is something that we're very, very excited about, and I'm in particular very excited about commerce in India.
You know, I'm going to give the audience an opportunity to chat GPT your questions to us as well. So if anybody has a question for Oliver, do raise your hands. I'll try and get the microphone across to you. But you know, Oliver, since you look at international markets, and while we are talking about the need for harmonized regulation, for uniformity as far as rules are concerned, every jurisdiction is dealing with regulation in its own way. India has just put out its own AI governance framework, and while you will have to comply with whichever government decides to do, does that, you know, how does that impact the fact that you're dealing with different regulations across different geographies? How does that impact your planning as well as your execution?
For us, it makes sense, right? We think we've always taken a stance of engagement. The first person we hired on the ground here, right, when ChatGPT was only like 1 year old, is someone to focus on engaging with government and with policymakers.
And is that why your office is in Delhi and not in Bangalore?
Look, we are hiring everywhere. We are hiring everywhere. And yeah, so but for us, it's really about engagement. This is a new area, and we think that it makes sense. And so we look forward to working with different governments on multiple areas, right? Policy being one of them, to make sure that AI can be used and benefit society and can be used in a responsible way. And we're doing that everywhere. Yeah. So back to your question, how does it impact? It means that I am collecting more and more airline miles because it just means I have to fly to more places. But these conversations are great because they're very productive, and everybody wants the same, which is getting the benefits of AI.
You know, Prashant, I could see you. I could see you gently raise your hand. So maybe we could get a microphone across to you, and we'll take that as the last question before we close. If we can get a mic across to Prashant. Prashant, you can run up on stage, and that might make it faster if we with that there. Go ahead.
Oliver, thanks very much. Fascinating chat there. You know, in the last panel, there's a lot of hand wringing in India about the fact that we don't have real frontier foundational AI models. It'll be uses of frontier models like ChatGPT, but you know, do you see a roadmap where, with India, with its engineering talent, is able to build a foundational deep tech frontier kind of model? Not exactly another ChatGPT, but something on those lines. What's your sense? You've been here meeting people across enterprises, as you said. How do you see it?
Undoubtedly, I think that my takeaway from being in India the last couple of days is just the talent, right? The engineering talent is unparalleled, and so much talent, right? And so I don't know the answer to that, but I would not be surprised. I think that India certainly has tremendous talent, and we're a very, very excited partner with the ecosystem.
So Oliver, let's close by asking you what 26. ChatGPT.
Yeah, I think it would be my hope is that the headline is not about ChatGPT. My hope is that the headline should be around how ChatGPT AI and our services has actually impacted an incredible swath of the part of the population. And I think that would be the headline we're going to go for. It's not about us. It's about really making sure that India benefits from all the research and the progress we've made in AI.
And we look forward to seeing a lot more of you here in India. Oliver J, many, many thanks. Ladies and gentlemen, a big round of applause for Oliver J, the MD at OpenAI, looking at international markets, very, very confident about their growth here in India. Appreciate your time. Thank you very much for joining us.
Thank you for having me.
Thank you, Mr. Jay and Shireen. That was illuminating, especially, on how quickly this is moving from now turn our gaze to the cosmos, where India's ambitions are soaring higher than ever.
In just 2 years, ISRO has redefined the boundaries of space exploration from Chandrayaan-3's historic South Pole landing and Aditya L1 solar orbit to new navigation satellites and the NASA ISRO NISAR mission that took flight this July. It has been a remarkable trajectory of science, scale, and ambition.
And to take this conversation forward, may I invite Parikshit Luthra from CNBC-TV18. And joining him is the man steering India's next great leap in space exploration. Under his leadership, ISRO continues to push the frontiers of innovation, discovery, and global collaboration. Please welcome ladies at your organization.
Thank you so much, Mr. Narayanan, for joining us at our Global Leadership Summit. I just want to begin with a bit of introduction. ISRO has been a very, very close part of India's growth story and will continue to play a very important role in the Viksit Bharat vision by 2047. What is the size of the global space economy? Ladies and gentlemen, according to the McKinsey report, the global space economy was about $630 billion in 2022. This is set to grow to $1.8 trillion by 2035. What is India's size of it? Currently, about 2 to 3%, $8.2 billion. This is set to increase to $44 billion by 2033. The Indian government, along with ISRO, has been rolling out several reforms. We've launched InSpace so that ISRO and InSpace together can mentor startups. There is the FDI policy for the space sector. We've significantly liberal investments in private companies. You also have a venture capital fund for startups, which is almost to the tune of 1,000 to 1,500 crore rupees. So what more is ISRO's ambition? What does Mr. Narayanan see that ISRO and the private sector can do together? Ladies and gentlemen, let me begin by speaking about the Bahubali. Yes, just a few days ago, India launched its heaviest communication satellite. It was a 4,400 kg LMV-3M5 that was launched. Mr. Narayanan, a proud moment for you, isn't it? Could you tell us, what does the Bahubali satellite say about India and ISRO's ability?
Thank you. As you introduced, on 2nd November, we have successfully placed, using our Bahubali rocket LVM-3, the CMS-03 communication satellite, which is the heaviest satellite ever launched by Indian launcher in the geotransfer orbit. And this is going to bring a lot of benefit in the communication area. In fact, when I look at the launch vehicle, this is the launch vehicle, this is the 8th successful mission of this LVM-3 rocket, built totally by India. And today, we can say one of the launcher, what we are having, has performed 100% reliability, all the launches going through successful. Again, when we started this countdown for this mission, we had to face tough weather situation. Then we were thinking whether we had to postpone the launch. Then after thorough analysis, with the entire team, we decided to go ahead with the launch. And today, it is a successful story. And India has placed the heaviest communication satellite in the geotransfer orbit using our own launcher. In fact, a similar rocket, similar communication satellite, 12 years back, we had to go abroad and launch. and we have built the capability today, and we have launched entire Indians, not only India, across the globe, and we have accomplished this mission.
Right. Ladies and gentlemen, a big round of applause for the ISRO team for the launch of the big Bahubali satellite. Mr. Narayanan, when it comes to collaboration with the private sector, today India has approximately 350 space startups. You've been mentioning them. Could you give us a sense of what do you really want private sector companies in the space domain to do? Also, if you could give our audience a sense, this is a very serious audience who are looking at opportunities in the space sector, in the defense sector, very, very closely. I'd like you to give us some vision in terms of our import dependence right now and where the private sector can come in to complement ISRO and our space ambitions.
Let me address this question in two parts. Number one, our program started almost 63 years back, and we have built almost 6 generations of launchers and 134 satellites. And currently, there are 56 satellites in the orbit, serving the common man of the country. And these numbers have to be taken to at least 3 times based on the vision of Honorable Prime Minister in another 2 to 3 years. That is what we are talking. And whenever we talk about a launching taking place or a satellite being placed in the orbit, out of the entire money, almost 80 to 85% is pumped in the private sector for the hardware realization. For example, this Mark III vehicle, what we have launched a few days back, almost 80 to 85% of the fund for realizing that vehicle has gone to both the private and Government of India undertaken companies for realizing the hardware. That is one aspect. Second thing, it was 2020, our Honorable Prime Minister Narendra Modi ji and the Government of India rolled out the space sector reform. In fact, when the space program was started, our idea was to bring the benefit of space technology to the common man of the country. We were not looking at it, to be frank, the business model, and that area we were not concentrating. Today, as you rightly told, the total space economy, global economy is something around $630 billion. And when we really reviewed, our share is hardly only 2%. And this number has to be increased. And this the space economy is going to be almost $1.8 trillion by 2035. And we are putting a target, ambitious target of 8% of that amount. And we are working towards that. Thanks to Honorable Prime Minister Narendra Modi ji for the great vision. And the Government of India rolled out the space sector reform. When the space sector reform was rolled out, hardly few startup companies were only working. Even though 450 industries are contributing for our program, they were like a vendor type of work only was done. But today, something around 330 startup companies are working in launcher build-up, in satellite building, in utilizing the satellite data. Huge satellite data is available. Utilizing the data for the benefit of the common man on real time, and people are working in that area. And Department of Space, as Secretary Department of Space, it is my responsibility to handhold them and ensure the space ecosystem in the country is growing in a different level based on the direction from Honorable Prime Minister. Towards that, lot of things are put in place. There is a in-space system for promotion and authorization. We have brought a new system, and which is started almost 3 years back. And the government is really supporting in a big way the financial incentives in terms of technology adoption fund, venture capital fund, and common technical facilities. Because when somebody is starting a space activity, if he has to invest huge money, it is not possible. So common facilities we have established, and we are totally hand-holding them. It is not that private companies or startup companies are doing the work on their own. We, the ISRO team, the Department of Space, is hand-holding them for enabling a vibrant space ecosystem in the country. Thereby, we can contribute for the Viksit Bharat 2047.
All right. Sir, I would also like to ask you, and this is something that startups and the space sector would like to know, are there more reforms in the offing? Are there certain measures that you are considering as head of the Department of Space, as the ISRO chairman, to maybe make it easier for space companies to operate, maybe attract more investments from global players into India?
Yes, answer is yes. In a single statement, I can tell the answer is yes. Because when you look at the demand, say there was a time 50 years back, our first space application was rolled out only 1st August 1975. Until then, there was space, but there was no space application in our country. And today, when I look back, there are 50 space applications which are there. And today, I cannot think about a country, a common citizen, without the space program and space application. 50 years back, that was not the case. The application goes every area. Let it be ensuring food security, water security, disaster warning and management, and connecting trains real time, monitoring the borders, ensuring safety and security of common man of the country. Everywhere it goes. And also there is a lot of opportunity for the economic growth based on this. When you talk about the space ecosystem growth, it brings lot of economics. The growth of the country is going to happen. It brings lot of potential job opportunities, and lot of things are happening. And we are open for international cooperation. We are allowing even foreign companies to invest in our own area. And when you look at the demand, I would like to tell a couple of examples, then probably you can understand. 1979, we built the first launcher and we placed in the orbit successfully in 1980. The capability of that vehicle, it was done by project director, was none other than APJ Abdul Kalam ji. The capability of the launcher was just 35 kg at that point of time. And today, our operational vehicle, the Bahubali rocket capability is 10,000 kg to low Earth orbit. Now we are conceiving and building launches for placing 40,000 kg, 80,000 kg type of satellites in the low Earth orbit. And the demand in terms of satellite requirement for the country is huge in numbers. Whatever we are having is very, very small. Something around 56, 57 satellites in the orbit is very, very small for a country with 140 crore citizens. It is very, very small numbers. And we have to enhance these satellites so much. Second thing is, yes, we are having a lot of satellites and so much data is there, and this data should be made available for the common man. One example I will tell you.
Right.
There was a time, if any natural calamities happen and if the people, the farmers have to claim the insurance, what is the type of time involved? They have to go approach the insurance company, they have to come, assess, and it's a 2 to 3 months process. But today, using the satellite data real time, in 5 minutes, you can demonstrate what was the situation before the calamity and what is the situation, and people get the insurance just released. And like that, this is one application I have told. And there are so
Right.
much application which is possible.
Okay.
Thereby, we are encouraging not only Indian companies, other companies also to contribute for our space ecosystem growth. And Honorable Prime Minister is rolling out all the measures, whatever is required for the space ecosystem growth of our country.
Mr. Narayanan, so I'll pick on one thing that you said, that you are looking to launch in future 40,000 kg, 80,000 kg satellites. Now that is big. Bahubali was 4,400 kg as a communication satellite. So when can we see the launch of a 40,000 kg or an 80,000 kg satellite?
Let me clarify one point. Our Bahubali rocket, right now you have placed 4,400 kg in the geotransfer orbit. I am translating everything to LEO orbit. If I translate this payload to LEO orbit, this is equivalent to 10,000 kg. Let me clarify that point. Now, with respect to 10,000 kg, we are talking about 40,000 kg, 80,000 kg, this type of capability we are talking. Now, we are already, the NGLV project is approved, and maybe in another 6 to 7 years, we will have the capability of placing 40,000 kg to low Earth orbit. 40,000 kg is 4 times of this present Bahubali rocket capability. Then, Honorable Prime Minister has given a guideline for us to work on crewed mission to moon, taking Indians using our own launcher to moon, land them safely and bring them back safely. For that, we have to build launchers capable of taking 80,000 kg, 75,000 to 80,000 kg to lower Earth orbit. These are all targeted by 2035 time frame.
So by 2035, we'll be able to put an Indian on the moon, sir. Is that what you're saying?
2040, we are targeting to place on the moon. 2040, we are targeting to place a man, an Indian on the moon and bring them back safely. To enable that, by 2035, the rocket should be ready.
Okay, 2040 is when...
once rocket is ready, we have to accomplish a couple of uncrewed missions, only crewed missions.
Right, so 2040 is when we're looking to put an Indian on the moon.
40,000
Absolutely, sir.
kg capable to be built by 2032, that type of time frame.
All right, thank you, sir. I'd also like to ask you about the Bharat Antariksh Station. Very recently at the Space Day, the Prime Minister announced plans to have a Bharat Antariksh Station. Now, experts also say that this will require a lot of investment initially and also to maintain, maybe around $3 to $4 billion annually. Why is a Bharat Antariksh Station or an India space station very important for us? And what's the role for the private sector?
Let me answer like this. Say, 50 years back, if somebody would have thought that we are going to develop a rocket satellite, a lot of people are questioning. And when we are talking about our own moon mission, Chandrayaan type of mission, people are asking question, why this is required? There are so many people who go gone and come back. What for it is required? But dear brothers, I want to tell you one thing. Even though so many people, it was Indian mission, Chandrayaan 1, of course, along with USA support, we only found water molecules for the first time on the moon surface. Please understand, man has landed on moon in 1969, but it was recently, 2008, it was Indian mission which found water molecule on the moon. And today, when you talk about a space station, it is a need of the hour for India to have its own space station. That is the program what Honorable Prime Minister has announced, the Bharat Antariksh Station. It is a 52-ton mass space station with 5 modules, because we cannot, nobody will lift as a single module. We are planning to lift as 5 modules, and the government of India has given approval for the first module. Now, if you ask about the benefits, number one, there are a lot of technological developments. Second thing, lot of microgravity experiments can be carried out in biomedicine, biomedical area, in manufacturing area, in materials area, in so many areas. So much experimentation can be carried out. And again, when you want to go for deep space missions, interplanetary missions, one is, yes, you always take off from Earth and move. And this can be a via media, a space station in between. For example, if you have to go to moon and land and come back, it can be an intermediate station which can be useful for that type of purpose. Another thing is, say, today we are talking about, a lot of satellites in the orbit. Satellite in the orbit, and we are also talking about how to reduce the debris content in the orbit. And there are ways and means of reducing the debris content. One is refuel the rockets, refuel the satellites. Another one is if satellite something gets into some trouble, you catch hold of them and do some repair work and reuse. So a lot of things are possible. So the space station is going to be highly useful. And this is the time. Suppose when we got independence, the country's stature was a particular stature. Today, we are the 4th economic status-wise, we are 4th in the world, and we are aiming towards becoming the 3rd level. And it is the time. Honorable Prime Minister, it's the right decision. He has rolled out this program, and it is going to be highly beneficial in long term for the humanity and for the Indians.
Right. Mr. Narayanan, what would be the possible cost of building this space station?
It will be in today's amount, approximately 12,000 to 15,000 crore is the type of amount what is required.
Right. And this will all be brought in by the government, or you're looking at a public-private partnership?
Say the first module, the entire approval is given by the government, and remaining, we have to take a call on this. But I want to tell you one thing. When we talk about this type of things, the hardware realization, which consumes almost 70% to 80% budget, this is going to the industries. And you can understand. Otherwise, the funding part today I cannot comment. And for the first module, Government of India has totally funded.
All right. I'd like to ask you about investments in the space sector. We saw a slowdown in space investments globally in 2024. It was a 55% fall compared to 2023. Why do you think the investments in the space sector, including in the Indian space sector, have been falling? And what would be your advice to the private sector in terms of the kind of solutions they should be looking out for? What is the kind of value addition for the future that could change lives, that could be useful for people like you and me, and that could actually attract investment? So what would be your advice to the private sector?
Say, my advice to the private sector is, if you do a small study, we have started the space program something around 63 years back, and till today we have built only 134 satellites, and we have accomplished only 103 launch vehicle missions. But as a country, when you look at, for example, take Sindoor operation. For Sindoor operation, the satellite has to be utilized, and the entire activities happened in one portion of the country. Now, if the entire country has to be monitored and the safety and security of the citizens has to be ensured, the number of spacecraft required are huge, and it is government alone cannot do. And the launch vehicle requirements are so much. Guideline from Honorable Prime Minister, 63 government departments are using the space data, satellite data, like Agriculture Department, Water Resource Department, Railways, and then, of course, Airport Authority, and the IMD. So many departments are using. And all state governments, for one way or other, they are using the data. And we had a user meet with all the people, all the user departments, all the state government. You know, almost 90 reports, each running into 200 pages as the requirement document has come out for next 15 years. We have summarized everything. Now we are taking forward. I can only tell to the private sector, the space demand for our country is huge. The satellite demand for our country is huge. When we talk about a developed nation by 2047, that stature, there are a lot of things to be done. And space is going to contribute in a very, very big way. The internet connectivity, disaster warning and mitigation area, connecting trains on real time, and connecting automobiles on real time, and reaching out to all the citizens, and so much, and ensuring food security, water security, telemedicine, so much application. In fact, if you allow me to talk on application, I will talk 5 hours on application alone. That is the type of demand. And you know, for example, you take lightning as one of the disaster. There are people today we are losing, and we are working on that area, how to have a advanced forecast. And earthquake, we are working on that type of area. So thereby, I can tell the space is going to be a very attractive area, and government alone cannot do. It is the private sector, the startup companies who have to really come forward. And we, as the Secretary Department of Space, as part of the government, we are there to handhold. And I can assure those who have worked in the space,
Mr. Narayan, you know,
those
one
who
question.
have worked in the space,
Yes,
never, ever, only one point, those who have worked for us in the space program, never, ever, they have got a loss in the game. Always, they have grown along with us. That much I can tell in a single statement. So we are welcoming all the industrial partners and auto companies to work with this.
Mr. Narayan, if India has to become a developed nation by 2047, how many launches do we need to have per year?
In my opinion, I think Honorable Prime Minister has recently clearly rolled out, first to your question, at least 50 to 60 launches, 50 launches minimum per year has to happen. This is what current thinking. And when I joined in this organization 41 years back, one launch once in 3 years. That was the story. And from that, almost a launch per month we have come. That means 12 launches per year. Now this number has to go at least 4 times. This is the direction. This is the guidance given by Honorable Prime Minister. And we are working.
Question. questions. It's been excellent having you here at our Global Leadership Summit. My final question, one personal vision of Mr. Narayanan, our ISRO chief, something that he wants achieved during his tenure. If there's one project close to your heart, which you hope that India achieves in probably during your tenure or in the next 10 to 20 years, what would be that dream project for you?
I will give you two projects. First one, the Gaganyaan program, the Indian human spaceflight program, and sending our own Gaganyaan 3 to space and bring them back safely. We are working for quite some time. And right now, it is not ISRO program alone. It is the Indian program. It is a country program. And I want to accomplish that program. Right now, we are working on the uncrewed mission, and we have to have crewed mission. And of course, then after completing 3 uncrewed missions, we have to go for the crewed mission. So that is one of the activity. Another thing is, our country, when we started our space program, we used to move our rocket pods using old bicycles. I think you all may be knowing. From that, today, 10 places we are number 1 in the world. 10 places. And at least few more places we want to become number 1 with the contribution of ISRO during my tenure. This is second target what I'm having in mind.
All right. Big round of applause, ladies and gentlemen, for the ISRO chairman. Thank you so much, sir, for taking our time to showcase your vision for India's space sector, the opportunity for the private sector to step up as well, and the kind of value addition, the kind of products we should be looking at, and also giving a challenge to the private sector to at least look at 50 to 60 launches per year. Thank you once again for being with us here at our Global Leadership Summit.
Thank you, Dr. Narayanan, and thank you. Thank you, Dr. Narayanan, and thank you so much, Parikshit. Let's zoom out for a moment, because across boardrooms worldwide, 2025 has been a year of serious recalibration. What started as managing inflation and supply chains has turned into something bigger.
It absolutely has. Companies are now dealing with geopolitical tensions, tech disruption happening at breakneck speed, and consumers who want very different things than they did just a few years ago.
Absolutely. Strategy is being rewritten. Please welcome back Shireen on the stage to lead the conversation and to give us that global perspective. We have Christoph de Wusser, CEO and Worldwide Managing Partner of Bain & Company. Please welcome him, ladies and gentlemen, with a big round of applause.
Well, ladies and gentlemen, you just got a glimpse from the ISRO chief on what India's space program is going to look like and what the ambition and the aspiration there is. It's time now to bring things back to Earth. And Christoph, thank you so much for joining us here this morning. It's a pleasure to have you at the Global Leadership Summit. We last spoke in Davos at the start of 2025. And you were very bullish on India. In fact, you said that you're out on something, I'm paraphrasing, of course. But as you look at how the year has panned out, more importantly, what has happened as far as the global economy is concerned, what's the read now on India as we look into 2026?
Yeah, I think first of all, it's a pleasure to be here and great to be together again. The read on India, in my view, is very similar to the read that we had on India a few months ago. Despite everything that happened over the last months on a global stage, India continues to be pretty much the only country in the world, the only scale country in the world that, if you take a longer term view behind the short term vibrations, can focus on what we call a double engine, a dual engine. You have incredible population growth, and that is what a lot of countries in the world would be dying for nowadays. You know, if you look into China, Europe, even the US, with some of the latest policies, you will have a reduction in labor forces in big parts of the world.
That engine is a fabulous engine for India. And then the whole recalibration towards a post-global world and the role that India can play to it is the second engine that India can play out. And so doing that at scale in a country with 1.5 billion population in the future is kind of an exceptional position to be in. So we continue to be incredibly bullish on India in terms of what can be done within the country, and for India, what it can do at a global scale. That dual engine for India is exceptional in today's world.
Let's talk about that dual engine that you talk about from an Indian point of view. And while the services side of the story has, of course, been firing on all cylinders for a while now, the hope is that the manufacturing side of the India story will also fire for India in a similar way. What's the sense that you get specifically on manufacturing in the context of this global reshaping of supply chains, diversification of risk, and people are sort of looking at investments? Do you believe that this is going to be the opportunity, this is going to be the breakout moment, so to speak? Or given the fact that we're on the receiving end of the US tariffs, that there's going to be a little bit of a pause on that?
Yeah, I think we need to look for India always behind short-term changes on tariffs, on policy from the United States. So yes, there's exceptional tariffs at the moment on India driven by the oil purchases that you do from Russia. But I think in the longer term, all of that will normalize, and it will normalize on a global basis on the fact that tariffs for everybody around the world will be a fact as a core policy in the United States, independent in our view, if it's a Trump administration or another administration. That will be a feature of future trade relationships with the United States because they need it from a fiscal point of view. And so that opportunity for India on the manufacturing side continues to be there for the longer term. And the opportunity, I think, for India is to take the manufacturing side, not just like, for instance, China has taken it in the past, but immediately take a future back view on how you can take manufacturing. If we see the big global trends from a manufacturing point of view, it will go robotic. The humanoids will be coming our way. And I think India has a unique opportunity to build out its manufacturing vision on future policies around electronics, data centers, etc., and around a way of manufacturing will be the future way of manufacturing. Doing it in a robotic way fully, and then build the high quality jobs around it that will serve India beyond the pure manufacturing jobs.
That's interesting that you talk about moving towards robotics and humanoids, and of course automation has been part of the Indian manufacturing story, just as it's been part of the global manufacturing story for many years now. But I would imagine that the challenge that policymakers and CEOs are faced with today is, what do you do with jobs? What do you do in the transitory period? Because the pain is often mostly felt during the transition. So how are global boardrooms at this point in time envisaging this future where you're going to have more robotics, humanoids? How are they prioritizing the needs of the people versus the needs of the organization?
Yeah, so it's going to be an interesting future, both on the physical labor and on the brain, let's say. Both will transform. The one will go through increased robotics and humanoids. The other one will go through increased agentic. I think as global companies, you always have to lean into the future. So you cannot say, I'm afraid what's going to happen with my workforce, so I'm not going to lean in, because that is a de facto loss of long-term competitive position. So you have to lean in. And then what we see with all those transformation, they're required for competitive advantage. They're business transformations enabled by technology. You have to reimagine every single of the workflows that you operate as a company. And then comes the trick. As you reimagine the workflows of your company, you have to reimagine how you adjust the workforce of the company, and doing that hand in hand in order to reap the benefits of the AI revolution, and at the same time to develop, upskill, and transform the workforce that you will be sitting on. And like we've seen in prior technology revolutions, 90% of the jobs that existed in 1900 didn't exist a few years later. And we will see a similar revolution. The current jobs might be replaced by other jobs. It will not be that current jobs will all disappear. Because nowadays you see already with agentic, you can't just trust agentic. You still need to have a human in the loop. We're just going to see a different workforce, different skill sets of the workforce that will be required. And that dual migration of workflows and workforce is the invitation that we give to all the CEOs in all of the boardrooms, not just to focus on the AI use case, but workflows and workforce in parallel.
Yeah, work on both those in parallel. But you know, we're here, Christoph, to talk to you about what global CEOs are thinking at this point in time. And you said that fear should not hold you back. In fact, if anything, this is a time for companies and for CEOs to lean in. What are you hearing within boardrooms? Where are CEOs choosing to lean in? What are they choosing to lean in on?
Yeah, the obvious one is, of course, AI. Everybody's
How
leaning.
could it not be?
How could it not be? And they're leaning in on different ways. I think increasingly people see that it's not just leaning in, as I said, on the use case. It's leaning in on the business transformation for competitive reasons. It's leaning in as CEOs, not to outsource, let's say, your transformation to a chief digital officer or chief data or technical officer, but as CEO, you have to lead the business transformation yourself.
So the CEO is now the CTO and the data officer all in one?
No, the CEO orchestrates the business transformation enabled by AI and takes it as a business transformation. And that is a big shift also because everybody, of course, spends significantly more on technology now, and you need to see the returns of the investments that you do. And you can only do that if you take it as a transformation, not as a use case that tries to scale. The other question that's in all of the boardrooms and that you hinted at is, how do I navigate the post-global world?
Yeah.
What's funny, we often hear companies say, we don't necessarily have our geopolitical strategy sorted out. And we say every company has its geopolitical strategy, because where your people and your assets sit at the moment, that is your geopolitical strategy. And then you can say, where am I long, where am I short in my strategy, and do I like what I'm sitting on, and how do I navigate and change that? So first AI, second the geopolitical side. And the third one is, do I have enough energy? Do I have affordable energy for the future? And the fourth one is capital is going to be structurally more expensive in the future, is our view. You know, again, making abstraction of short-term changes in interest rates. But all of the dynamics drive higher cost of capital, and we can expand if you want. And so the choice of where am I going to spend my money? How do I drive my capital allocation between technology, geopolitical strategy, and all the investments, M&A that I need to do, is the fourth one of the core trends that we see in boardroom. And that is, it's exciting to be a CEO in today's world. It's exciting to be in the boardroom.
Is it? I'm asking you, is it exciting?
It is exciting because it's one of those unique moments in history where we're living the revolution in a geopolitical, reset in a certain way. And these are unique moments to lead as CEOs, to drive strategy as CEOs, change your organization. So I think it's very exciting.
Let's double down on those 4 pillars that you spoke of. And let me start by talking to you about AI. And as you rightly said, every company today is positioning itself to be an AI company. We're seeing trillions of dollars being spent. We just had OpenAI, and they're spending or intend to spend $1.4 trillion over the next 8 years on AI. What kind of capital are we talking about within the boardroom for organizations that are not necessarily tech companies or AI companies? How are they choosing to invest, and what are they looking at in terms of timelines on return on their investments for their AI adoption?
Yeah, it of course differs very much where you sit, if you're a services company, if you're a manufacturing company, etc. I think we differentiate between a few very different classes, which is everybody that's investing in the infrastructure at the moment puts massive amount of capital because they don't want to lose the race in the world of capital deployment. I had one of the CEOs of the big 4 hyperscalers tell me at a dinner that we had to say, I'd rather spend 50 billion now too much, because if I spend 50 billion too little and I lose the competitive race, that is an issue. Now, will all that capital drive returns? It's a big question, right? Because we think there needs to be a 2 trillion additional revenue being created in order for having the payback on all the capital investments that are being done now, and that remains to be proven. Now, everybody that's on the application side of the AI obviously spends in a different way. And if you're on the application side, I think you need to count on increased technology spend in order to have the compute power, in order to have the robotics, in order to have everything that we discussed, and spend more focus on how is that investment in the AI side going to pay back. Do I actually understand the drivers of my capital allocation, the drivers of my, of the services that I buy, how it will return, and is that investment directly linked to the areas that will drive competitive advantage in the future? So what that means is, does it drive better products that I put into the market? Does it drive better customer service? And does it build my long-term competitive cost advantage? And what we see CEOs do more and more is to make the direct link between competitive advantage on those dimensions and the investments that they do. And that is a very different philosophy that we see in boardrooms now versus, as I said, let's try a use case and see if we can prove that the technology works. Link it more to competitive advantage and the direct returns on the on the investments that you do.
So let me link competitiveness as well as the investment philosophy or the investment thesis driving CEOs and boardrooms today. And I'll ask you this in the context of a debate that's raging here in India for the IT services sector, for instance. Have we done too much in terms of capital allocation on buybacks and too little on innovation? So, what are you seeing in terms of the choices that people are willing to make? Is it also going to drive more M&A? Is it also going to drive more acquisitions as people look at enhancing and beefing up capabilities? Could we now see the next wave of that, Ansu?
Yeah, I think it'll be the two parts. So the first wave, and I build on the IT services part, IT services, global capability centers, that core part of the Indian economy will have to transform itself. It has to lean into the AI. It has to understand how it changes the pricing model, value-based versus people-based. So there's a big transformation that needs to happen there for every single of the company that sits on a lot of physical labor. To see how they innovate with AI and they change their business models, IT services pricing. As I say, that's a big one. The other piece that is interesting to see from an Indian point of view is M&A is always a core part of leaning into the future. Even if you look at how the big hyperscalers in the US build a core part of their capabilities, take Google and they've built a significant amount of that through M&A. Within India, we see that you sit on 2 to 3% of the GDP that goes into M&A. And that is lower than what we see, for instance, in the United States or other parts of the world where it goes up to 5%. And I think there's an opportunity for the leading firms in India to lean even more within the new capabilities through investments, through M&A, and get it up to the level that has actually allowed some of the leading firms around the world to build their capability set through increased M&A. And I think the regulatory environment will also allow for that.
So lean in on M&A is the message to corporate India, Christoph. But let's address the geopolitical reset that you spoke of. And I think every leader here in this room and those watching us on TV and online are grappling with this. What can organizations do? What are organizations doing at this point in time to deal with this global reset? How are they trying to mitigate risk? Diversification of supply chains, etc., is the obvious choice. But how else are they trying to deal with this geopolitical reset?
Yeah, we talked about everybody has the geopolitical strategy, and we recommend companies to think like a hedge fund.
Okay.
Hedge funds have positions where they're long, and hedge funds have positions where they're short. And then you have to reflect, do I like where I'm long, where I'm short? If you're sitting with likely tariffs and 2/3 of your revenue is exposed to the US, do I actually like that exposure, or do I want to diversify that a little bit away? So that is one of the one of the first things that we recommend all our clients: think like a hedge fund on your geopolitical exposures. The other piece that we recommend is the long-term trends are clear: AI, post-global world, higher cost of capital, and all the energy shift. Now, the short-term vibrations are not clear. And so if you're not 100% sure on the type of prediction that you can take, you need to do two things. The first one is increase your short-term adaptability. For instance, if tomorrow a certain president in the world decides that on certain goods they're going to temporarily increase the tariffs, can I absorb that? And how can I adapt my cost structure, my flows, my manufacturing, my supply chains, that I feel good about it? The second piece is if you cannot be sure that you can adapt, am I sitting on the right resiliency in my P&L shape and in my balance sheet to absorb the temporary shocks that might appear if my prediction wasn't right? And so the recommendation that we do to our clients in that sense is long-short hedge fund approach. And if your predictions are wrong, where can I adapt, or where can I build resiliency in my strategies?
And number 3, bring Bain on board.
That is always a good recommendation. I will not disagree with you on that one.
Get a consultant. But, you know, on a more serious note, are CEOs feeling comfortable with the two things that you spoke about, being able to either absorb the hit in the short term, or do they actually have the inbuilt muscle to move with the kind of agility? I mean, it's an unpredictable situation. We don't know which way the tariffs are going to go. We don't know whether the Supreme Court will actually strike down the tariffs and there will in fact be a refund. So, you know, what kind of organizational agility can deal with something like this?
Yeah, I think increasingly companies are adapting to that reality. It's one of the elements that I think for boardrooms and for CEOs are good to run through. And it's not necessarily just old school scenarios like what happens if it's 5% more or 5% less. That is not the scenario planning that you need to do now, but you have to run through a few of external shocks that might happen, short-term shocks, short-term changes, and upfront run your response to those shocks to say, how would we adapt? And are we happy with how we can adapt in the short term? And if not, what additional things do we do? And then on the resiliency we talked about, you know, Jamie Dimon talks in the acquired postcard really nicely about the fortress balance sheet and how he built JP Morgan. Yeah. But those adaptability, it's where we see a lot of our, you know, the CEOs around the world change actually their in-year planning, their in-year muscles on budgeting planning to be able to adjust and absorb those shocks, whether it's +1 manufacturing strategies, whether it's how do I play with inventory, how do I play with changes in my balance sheet that will be able to adjust that.
So let's go back to your point on thinking like a hedge fund manager at this point in time. What's the consensus? What's the consensus call that you have on the back of the conversations that you're having with CEOs? What are they long on? What are they short on?
Well, it depends very clearly for every type of company, you know. I think nowadays, in today's world, there's nothing wrong with being long on shorter supply chains, being long on local demand, because a lot of the trends that we see on tariffs are fundamental. What people underestimate sometimes is that the reason of what's happening in the US and why it's happening in the US is because the globalization has risen hundreds of millions of people around the world out of poverty, which has been great for the world, but it hasn't been great for the American middle class. And ultimately, it's a very narrow part of the United States society that has been benefited from the globalization. The wealthy people and the tech-oriented people have benefited, but the middle class in the US hasn't benefited from that. And so what the Trump administration tries to do is to increase the income of the average American have higher quality jobs, work on national security, and make the public finances of the US more healthy. That is structural, and that is for the longer term. And so that is not going to go away, those fundamental trends. And within that, post-globalization, therefore, being long on local demand, short supply chains, and technology is always a good thing to do. And so that's what we see. And that's also where the opportunity for India lies, because you sit on the local demand, and you can set up a manufacturing base that in our sense is going to be smaller scale, shorter supply chains, and more automation and more humanoids and robotics, where India can lean into the future and drive exactly that.
You know, I think this is an important message that you're sending out, Christoph, and I don't know how many people have actually
companies, the challenge is clear. Stay resilient, but also reinvent. Find growth not despite the headwinds, but by navigating them smartly. To guide us through this discussion, please welcome back Lata Venkatesh. And to discuss what that map looks like and where the light may lie beyond the tunnel, we're joined by leaders who know the view from both India Inc. and the global stage. Ladies and gentlemen, please put your hands for Dr. Anish Shah, Group CEO and MD, Mahindra Group, Anant Maheshwari, President and CEO, Honeywell Global Regions, and Dr. V. Ananta Nageswaran, Chief Economic Advisor to the Government of India.
Ladies and gentlemen, please join me in welcoming them with a big round of applause.
Thank you very much, Dr. Nageshwaran, Anant, and Mr. Shah for joining us. This is a much look forward to conversation. When we started off, probably somewhere in August, planning this, we called it Growth Map, Light at the End of the Tunnel. There is a printing error. There is no tunnel here. So really ticking well. So we will discuss, of course, a few clouds. But at the moment, it doesn't look like there is a growth tunnel at all. In fact, let me start at that point, Dr. Anand Nageshwaran. In the last conversation I had with economists, Indian economists, after we saw the auto sales numbers and we saw the PMI number, we saw the other tax data for September, at least 2 or 3 economists have moved the FY26 GDP to above the 7% mark. Most people were, 6.6, 6.7. There wasn't even a 6.8. And now at least a handful of 6.
So, but you're right, Lata, good to be back here. And I think last week somewhere I mentioned that I'm now more comfortable looking at a number north of 6.8%. My original range was 6.3 to 6.8. And back in August, we were all concerned that whether we would even go towards the lower end of the 6 to 7 range. But now I think there is a lot of comfort in saying it would be definitely to the north of 6.5. And I'm more comfortable saying even not 6.8. But whether I will put a 7 handle in front of it, I'll wait for the second quarter numbers to come out before I move even a notch higher.
But would you say there is an upward bias to your 6.8 to 7?
As of now, I would say so. And in fact, if by some chance, as we are still hoping, there is a resolution on the trade front, then the upward bias will become a mainstream forecast.
Okay, then let me follow up with that question. I was going to come to that point when we talk about trade as a tunnel. The handful of other economists who are waiting to push up their forecast above 7 are waiting for announcement on the US-India tariff deal that's under negotiation. Can you give us any clarity, any hope that is it November, is it December?
I mean, hope is all of it is what all of us have, that it will be hopefully done soon.
So when North Block tells us we trust it more.
But no, we are not even North Block anymore, right?
Okay.
We are in Kartavya Bhavan now. So, but anyway, jokes apart, I think this is something that we probably should be asking Vanijya Bhavan and not Kartavya Bhavan.
Okay. Yeah, Vanijya Bhavan is giving us a lot of hope. But at the moment, we don't even have to wait for the tariff settlement. We are really enthused by the consumption in India during the festive season. Mr. Anisha, your numbers were mind-boggling. When I saw your second quarter numbers itself, I think it's 19% total volume. Tractors were, of course, much better. Overall, auto volume is 19%. And we're not even talking festive season. We're talking September 30th. And revenue 21%. If I look at your volumes for the festive season itself, personal cars, since Diwali is 23% for the industry, that is. Two-wheelers are 22%. So very good volumes for the festive season. What would you guide for the full year? And you are not just an automaker. I understood when I was walking with you inside. He tells me that he's only 28% an automaker. What is the rest of your universe telling you?
So Lata, first, it's a pleasure being here with you. And you're right. If you look at our profits over the last 5 years, auto is only 28%. And the part of auto that everyone loves talking about is less than half of that, which is SUVs. So as we look at results for this quarter, we actually play in 70% of India's GDP. And for us, this quarter, the farm business profit after tax was up 54%, Mahindra Finance 45%, Tech Mahindra 35%, our growth gems 22%, and auto up 14% because we've had some transition which we caught up in October, and therefore for the quarter itself was a little lower. But you can just see from that that the Indian economy is firing on all cylinders, which allows us to fire on all cylinders. And therefore, I'm very bullish about growth. You started with asking the right person for growth forecasts. I'm the wrong person to ask for this, but my forecast would be greater than 8%. 8 to 10% for the next 20 years is what we see from a business standpoint.
That calls for a round of applause. Aapke muh mein ki shakkar. But for the full year itself, what would you guide for the auto sector and for tractors? Are you confident of double digit?
Tractors, we do see growing in low double digits now. Our initial estimate was mid-single digit or so. And auto also was much lower from an industry standpoint. We see it possibly still in single digits, but our guidance for SUVs has been mid to high teens, which we did last year as well, contrary to the industry, and we expect that to continue this year.
Consumption, of course, is the theme that's been clicking. I'm going to come back with the more difficult question of capex, where we want to see more. But I'll start with you, Anant, over there. We in India have been slightly disappointed by the way the FPIs have kind of shunned India. There have been outflows for 3 of the last 4 years. FDI is coming, but it is also going because of the very good IPO market. Since you are, as Honeywell, looking at the interface between foreign investors, what are foreign investors thinking about in terms of investing in India?
So maybe I'll use the analogy that you used of the tunnel. And I was reading that title, Flying into India yesterday in the evening. And I said, I don't see any tunnels in India. And they're definitely not dark. If I take the automotive industry example that since Anish is sitting here, and if you were flying into Germany or into Japan and you thought about the automotive industry, yes, there are some tunnels and you got to think through them in terms of where the brightness is. But I would say in general, even the numbers that we were talking about, 6.8 or above, the growth numbers that you just spoke about, Mahindra, they are in an order of magnitude different from everything else in the world. So there may be short-term moves around the FDIs or the FDI, but in general, if you ask any CEO globally, India is a bright spot. Middle East is a bright spot that they would want to have a general lower risk sort of investment cycle into these two markets. India primarily with its consumption-led economy, a local economy, is more, I would say, risk insulated from the global moves that exist.
Well, the tunnel part for me becomes relevant when I look at the global, picture, global ecosystem, because a lot of CEOs, or at least economists we speak to, tell us that the CEOs are riddled with uncertainty. I mean, you don't know whether to invest in this country or that because you don't know how much you will be tariffed, where this product might be tariffed more here. You move your, we asked Indian textile guys, will you shift a little bit to Vietnam because the tariff is lower? Saying, who is to say that that will not change, 2 years from now? So they're not moving. The point is they're not investing because they don't know. Is that, a likely cloud for us, a likely tunnel?
So maybe it is a very sectoral response. If you are today in the business of supporting the data infrastructure, data centers, the networking, the communications, you are supply constrained on the planet. If you are in this business of supplying any form of energy in any part of the planet, you're supply constrained.
Honeywell would know that.
If you are in the business of supporting high-tech manufacturing, you're supply constrained. So there are many sectors on the planet which are seeing a very uniform aviation, a very, very uniform investment cycle. So I don't see those sectors as being affected. It is more, I would say, short-term sectors where there may be a little bit of a concern, but in the larger picture, I still see a lot of capex, and I can speak from the conversations in Abu Dhabi and on Monday in Future Investment Initiative in Riyadh the week before that. There is a lot of capex cycle that is being announced and actuated.
Okay, well, that's good to hear. But Mr. Anish Shah, are you, enthused by the consumption, that the brilliant numbers that you just reported? to believe that the consumption cycle has picked up enough to enthuse you and other entrepreneurs like you to do more capex. You know, the private capex cycle is not where we would like it to be. The government has done its bit, and now it has to plateau at some point. You know, we have to reduce our fiscal deficit as well. So, is private sector picking up the baton well enough? Do you see it picking it up?
Let me start with what we've done. Over the last 4 years, we've quadrupled capacity for auto business. And we are still putting in more capacity. We've added 60% capacity to our tractor business. And we are running out of capacity and therefore adding more there as well.
Good to hear that.
So we have been at the forefront of investing. To your question of are we enthused? Yes, a lot more. We believe that the fundamentals are in place for the Indian economy. The demographics, the reforms that we've seen and that we are seeing, the commitment to reforms, the physical and digital infrastructure, all of these are very strong foundation elements. The recent GST cut was a huge one in changing the sentiment. And that change in sentiment is what we are seeing in translating to some of the numbers that you read out as well. And that will result in greater investments across the private sector. And we do feel that a number of industries and companies are getting above the 80% capacity utilization mark, and that will be a trigger for greater investments.
Okay. Well, that's good to hear. We would like to see it in the numbers as well. When we get capex numbers, we see more of government capex. Private capex is still running behind, though of course it's the larger giant. Dr. Anand Nageshwaran, we understand that we are, pre-budget consultations are starting sometime soon. Market participants who came here said they've already got invitations from the government, from Kartavya Bhavan for ideas, for feedback. We've got some very good success stories in PLI. We've got good success stories in the way we've boosted electronics, semi-knockdown and complete knockdown into India, assembling. What are the lessons that we have learned, and how can we ramp up to a faster pace of growth?
No, obviously, with the right set of more than the specific plans, it's the right set of framework, the legal and regulatory framework that enables successes in some of the sectors. For example, removing the inverted duty structures, exempting primary and intermediate raw material from customs duties, so that making the cost of production cheaper and competitive. Those are all the important success stories which we have learned from the electronic sector and so on. And therefore, making sure that in the process of boosting domestic production, there has to be a complementary goal of plugging ourselves into the global value chain. That's equally important, because I don't think we will succeed only by onshoring everything, but by plugging ourselves more intelligently into the global value system. For example, different countries have been able to have different kinds of leverage with the US administration's tariffs, and those were directly influenced by the amount of leverage they had. So we have to basically, the success of PLI has to encourage us to move from domestic indigenization to strategic resilience, and from then on to becoming strategically indispensable. And that is the lesson we need to draw from the PLI successes and move on to the next stage.
No, your point is well taken, sir. What is our rare earth is what we ask ourselves. Exactly. I mean, if someone challenges us, if someone bullies us, this ability to bully back, a wrong word to use, but what is our rare earth is what we have to develop. I take your point on that. And policies are being framed.
I mean, you look at what we did with respect to the consumption boost. I mean, we talk about consumption boost, but they're actually supply side boost, because supply side will not come without the demand side being visible. And that's the most important indicator, not interest rates. It is the demand visibility. So what was done in the direct taxes in February and indirect taxes in September, they are not about demand boost. They're also very much about supply boost. And you asked a question about private capex. Honestly, I think there is 1 year data, 23-24, has influenced us all to think that private capex has been somewhat disappointing. It's not so. There was a post-COVID rebound in 21-22. 2023 was a moderate year. There was a disappointment in 23-24, but whatever data we have until now from listed and unlisted companies in the private sector, 24-25 was a very good year for private capex, and which is corroborated by what Dr. Anish said just now. So I think even 25-26, notwithstanding global uncertainties, so far the numbers look good. On net FDI, which was an important pain point and a point for discussion. This year so far, touchwood, with 5 months of data in RBI's data, we're seeing net FDI is meaningfully higher than what it was in the last 2 years.
Which dovetails to the point that Anant is making. The other tunnel which I was worried about is AI. There is this big fear that, it'll impact jobs. So let me start with Ms. Anisha on that. You have your Tech Mahindra vertical, and there is this big fear that IT companies will not go to campuses in the same gusto. Where will our graduates and postgraduates look for jobs? Because IT is a big employer. And if IT employs, then finance will also go to the colleges. They look to you. They look to the IT companies. So what is your worry about AI? And what is your positive? Is it a worry in the first place? Will you go to the campuses, by the way?
I think we're going to go to campuses more and continue to grow more. If you look back over time, I started my career when computers were just coming in. The World Wide Web was a novelty. And
you were post-91 generation. At that time, people were flocking to the
But we've gone
campuses.
through so many challenges, if you were to call them. I call them opportunities, because you've gone through Y2K. IT companies were expected to roll over and die after Y2K. That didn't quite happen. We've had multiple technologies over the last 25 years, and each technology has brought a lot of productivity with it, and has changed a lot of jobs. There are a number of jobs that just don't exist today. If you just look at the phone, at one point we were debating it's worth doing a competition for how many people can list the number of devices that this phone has replaced. And think of how many jobs that has replaced. Who makes cameras anymore? Right? Who makes literally 100+ devices that are embedded in here? All those jobs are gone. But we have new jobs that have come up. AI could potentially be an accelerator in some form, and that's where learning becomes more important. So yes, AI will result in jobs changing, but that's going to create new opportunities. And that's what we're looking at right now to see how can we leverage AI, how can we accelerate learning for our associates and be able to grow in new areas to leverage their skill sets.
No, I take your point. I was in economic times at that time, and we were worried that if Excel comes, we didn't worry. We were all very happy because Excel will take away so much of the drudgery. I used to write LME prices in a register, and suddenly Excel meant that, all that drudgery was not there. But I ended up covering more commodities. Our corporate report doing 300. So that question to you, Anant, how do you see AI playing out? Are people moving back on investments for fear that of redundancies? You invest today and it's redundant tomorrow? Or are people worried about hiring at all? Because you hire and maybe you don't need that hire. Are any of these worries stopping invention, or how according to stopping investment, or how is AI playing out with global CEOs?
So I think I'll answer that question first to distinguish where the narrative on AI exists today and where it is beginning to happen. Even as you asked the question to Dr. Anish, you spoke about Tech Mahindra, the IT arm of the Mahindra Group, not the operations that the Mahindra Group has extensively. There is a very big difference between the IT world and the operations technology, the OT world, when you think about AI. And the CEOs also think very, very differently in the IT world and the OT world. What do the CEOs want in the OT world? In general, if you look at any report, any Wall Street or the National Stock Exchange, Bombay Stock Exchange report of any company, the CEOs want the same thing that they wanted 5 years back. They want effective assets, higher ROI. They want efficient operations and therefore lower cost of production. And they want more enabled people in terms of skills and capabilities. So effective, efficient, enable, same things. That doesn't change. What's changed is the tool that you use to deliver that. Now, the IT world assumes that you're always connected to the internet, that you always have data available. You can get it in your email, you can get it in your documents, you can get it on YouTube, you can get it on any kind of OpenAI capability that was being discussed a little while back. And therefore, probabilistic models make sense in the IT world. In the OT world, you can't get data easily. You can't get data from every car very quickly.
But you can get it with ChatGPT.
You cannot. Actually, to extract the data, you need very specialized capability to extract data in a refining capacity, in an airport, in any facility. You need domain. That data is very, very domain specific. And then you need deterministic models. I actually will distinguish with what the OpenAI speaker said earlier, where you can apply probabilistic models to drive NPS in a consumer situation, absolutely right. But when you are running a refinery, you want 99.999 certainty. That's a deterministic model. So where are CEOs investing today? They are investing in operations. They are making their operations more effective, more enabled, and more efficient with the leverage of AI. And that's where the investments are happening in a very big way. So that investment
AI is opening doors for investment, you're saying. It's not
Absolutely.
dampening investment.
Absolutely.
That's good to hear. That's good to hear. Actually, to your point on operations, we had a conversation with a gentleman in NASSCOM, and he said, where do you think AI will be applicable? Many of us in the audience guessed finance, because there's so much of data available. He said, no, manufacturing. And he gave some example of Apollo tires, which has put its entire manual into AI. And when there is a problem, the agentic is able to resolve it in hours, what used to take days, to call the guy, he comes and he checks. So actually they said manufacturing is the one that's using AI best. Is that your experience?
That is, we are using AI very extensively in manufacturing, and it helps on a number of areas, including improving quality. So if you look at the welding process, in the past, to test that the weld is done appropriately, it was effectively a destructive test, and it had to be done on samples, obviously. Now AI can do that same thing without destructing it and actually give us a much better quality as well. That's one example, but there are literally about 100 projects we have going on in manufacturing to be able to use AI.
And it's sort of affecting your hiring, which is the other big fear of AI.
In fact, Lata, if I may just add to that, think of an operator who detects a vibration in a machine. Now, if you're in a critical facility, the operator would call an expert to tell what's happening in this vibration. The general design would be shut the machine down till we figure out why the vibration is happening. Today, with the benefit of AI, you can have the operator enabled. The quick machine will do it in the next shutdown. So that actually increases the productivity in manufacturing.
Just a word on hiring.
We're not decreasing hiring. We are creating better products. We are creating better customer experiences. And with that, as we grow, we need more people.
Like my old Excel example, we did more. We did not fire.
I think on the same topic, Lata, so I think we can come up with, as a macro policy maker, as opposed to the more granular view that you sought from the other two panelists of mine, there will be both positive and negative anecdotes, and anecdotes will obviously carry much more powerful impact than numbers. The important thing is, yes, new jobs will be created, and some of them will be higher paying, and they will also happen over a period. So the real number is in these details. How many new jobs will be created, in what levels of skill and salary levels, in comparison to how many jobs will be not required or laid off, and in what salary levels they will be, and in what time frame. Usually what happens is, when a new phenomena arises, the level of people's preparedness to be able to integrate it in their lives, that will take a longer time. Whereas the immediate impact will be more on the negative side. So the time lag between these two. So the final conclusion in many of these matters still is yet to be played out. The previous industrial revolution eventually turned out to be net positive for the world. But the key word is eventually. And there was a period when a lot of vocations and professions disappeared, and there was a lot of pain. And the more important thing is, what is it that the state and the private sector do, given India's size and numbers, in order to create AI augmenting jobs, AI supplementing jobs and non-AI disrupted jobs, and what kind of skilling we give in those areas. So all these things will determine the eventual net benefit to the Indian economy, because our case is one of demographics and huge numbers. So, and the time lags can be very sensitive in a democratic setup as well. So these are all the other considerations from a macro perspective we are still sort of grappling with, and it is still early days for these kind of answers to emerge for these macro questions.
No, I agree with you. If AI plays out like electricity or like internet, then we are going to have better, more comfortable lives and more jobs, actually, more other kinds of jobs. But sir, once again, I want to remind you that our audience, many of our market experts told us that we are on the threshold of the budget. And a couple of budgets ago, we got this big boost in terms of PLI and India becoming a hub of at least telephones, cell phones, but a lot of other things as well. I mean, laptops and other things are following. What hope should we have from the budget or 2026 in general, in terms of the policy thrust to take us one step closer to that Viksit Bharat dream?
I think it's premature for me to comment about this, and whatever you mentioned about PLI, smartphones, semiconductors, etc., they all came from non-finance related departments. So these policy proposals will have to come from the operational ministries. And finance ministry in these areas actually only acts as a compiler, apart from what we do on the fiscal side, which we have done this year.
Finance ministry, Kartavya Bhavan, is able to inject the animal spirits
Absolutely,
with its actions.
which is what we have done this year with the direct taxes and indirect taxes, apart from the income tax simplification bills. So those are ongoing areas, and the FM mentioned about customs department and then about the public sector banking. So she has given you some inkling of what the finance ministry is thinking. But for the rest of the sectors, the initiatives will come from the other ministries.
Thank you very much, sir. You leave us with the hope that you are, positively inclined to give an upside risk to your growth forecast. And Anant is here telling us that FDI is willing to rush in, and India is seen as one of the interesting places, one of the important places. And Anisha is really exhilarated us by saying that he is looking at a 8 to 10% GDP growth. Who is talking about the upside of 7? He's at 8 to 10. Thank you very much, gentlemen, for telling us there is no tunnel and the growth map is bright. Thank you.
Thank you, Dr. Shah, Dr. Nageswaran, and Mr. Maheshwari. And thank you, Lata, for steering us through that insightful conversation. India's digital story is entering a defining phase, from building world-class digital infrastructure to shaping global policy on data, AI, and cybersecurity. The question now is how leadership keeps pace with this transformation and sets the rules for the next decade of innovation.
And to lead this conversation, please welcome back Shireen Bhan, and joining her is S. Krishnan, Secretary at the Ministry of Electronics and Information Technology, who's steering India's digital vision from the front lines of policy and execution. Shireen, over to you.
Well, thank you very much, Arundhati and Shruti, and thank you very much to the MeitY Secretary, Mr. Krishnan, for joining us all the way from Delhi. I know you were trying to be here with us, sir, but the PMO called, and so you couldn't, but appreciate you joining us virtually. Mr. Krishnan, you've just released the AI governance frameworks. What are the key priority areas for the government as you look at rolling out this framework and possibly regulating AI?
Hi, Shireen. So good to be with you, at least virtually, on this particular event. I'm sorry I'm not able to make it in person, but at least in this form, I'm able to interact with you. Coming to your question, I think I would put the innovation first. I think we made it fairly clear that government's objective and MeitY's objective is primarily to focus on innovation and give room for innovation. And regulation comes after that. What we have made very clear is that we believe we have a very positive outlook on AI and the impact that it could have for India and for the globe. And therefore, we need to give as much space as possible for innovation to play out in this space and for the true benefits of AI as a horizontal technology to be realized by the Indian economy, by India's people. At the same time, and as with all technologies, there will be elements which are problematic and which could potentially be issues. And wherever those issues arise, wherever there are potential harms, we will use both existing D2 frameworks and also other laws that already are there in the law books to actually figure out how to address these concerns. And if at all there is a requirement, we will tweak the existing laws and rules. And beyond that, if there is a need at an appropriate stage, we legislate. But today, the emphasis is fundamentally on innovation. The emphasis is on making sure that innovation is given adequate play in the AI space so that we can harness the benefit of this technology and at the same time guard against whatever harms can come up.
You know, Mr. Krishnan, you said innovation several times there, and you also said that we have existing laws to deal with problems that may arise on account of the AI adoption and AI rollout. So would it be fair then, sir, to say that at this point in time, the government doesn't feel that there is a need for a dedicated AI regulation?
I would say that we don't need a dedicated legislation today, now. But I will not say that no legislation is required for all times. We will have to see how it plays out, and we will, at an appropriate stage, if there is a need, we will come up with a suitable legislation.
Okay, so no legislation just yet. But sir, you know, the focus of the AI framework is essentially on self-regulation. While industry will welcome that, it often also leads to you know, problems because there's a lack of clarity on obligations, and ambiguity and regulatory uncertainty often crop up. Is that something that you're worried about? Is that a concern?
I think we will discuss with industry. We will nothing of this sort will go without adequate discussion with industry in terms of what needs to happen. And if there is any room for ambiguity, if there is any room for doubt, we will make sure that all such ambiguities are set at rest.
Okay, that's good to hear. But I want to shift focus now to talk a little bit about the AI mission. A lot of the conversations here at the Global Leadership Summit have focused on that, Mr. Krishnan. You know, the Indian government has expanded the scope of the AI mission from 10,000 crores now to about 20,000 crores. But that pales in comparison to what we're seeing countries like the US, etc., spend in excess of $400 billion, $500 billion. Is this going to be enough, Mr. Krishnan?
See, I think you need to understand one thing very clearly. The capex or the expenditure that we are talking about under the India AI mission is expenditure that the government is incurring. This is intended to be a catalytic investment. It's not intended to be the only investment, and it's not. And investments even in the government sector on AI could come from other sources as well, from other parts of the budget, other efforts that we are taking up. So that is one part of the story. The other part of the story is the numbers that you're quoting for the US and other geographies really are about private sector investment, corporate investment that you're mentioning. The $400 billion is necessarily taking place in the United States. It's of global companies, technology companies based in the US and the investments that they are likely to make. And some of those investments are taking place in other geographies, including India. And you've seen there have been some big announcements of data centers and other investments related to AI by US technology giants in India. So I think you have to figure out that it would not be very correct to compare what we are spending on the India AI mission, which is entirely government's effort, with the other broader investment numbers which are being announced by companies, which represent their global spend and which also represent not the government effort in that case.
No, fair point that you make that there is a significant private sector investment, but you alluded to one big headline number and one big headline investment. Google recently announced a $15 billion investment in its cloud businesses here in India. In light of that, are you also seeing more interest from other tech companies? Have there been conversations? What do you expect on that front? Could we expect more investment announcements?
Companies have also been speaking about investments in India, they are making investments.
Okay, we will look forward to hearing those announcements. Mr. Krishnan, we were just talking about the possibility of jobs being replaced, jobs being displaced, and that's become part of the increasing conversation around AI. Now, we've seen companies like TCS reorganize, restructure. It has led to job losses. Globally, companies like Amazon, Salesforce have let go of people, are letting go of people. How concerned is the government with the idea of job replacement and displacement?
You see, this is something that we are watching closely. Our understanding which we have from the companies we speak to and other change. They are pivoting on the types of jobs that they are looking at. They are looking at more jobs in those who create applications of AI and those who do that kind of work, and those who will eventually deploy AI applications. More traditional ITs roles are going out, and therefore they are retraining their own people with those skills. So I would say net, the impact on employment isn't likely to be as grave, or that is not yet such a cause for serious alarm. I think there are other opportunities which need to be taken up when we are looking at opportunities for our youth. But what is most important is skilling and making sure that we nurture the right kind of talent, and that we also ensure that the newer cohorts which are coming out are equipped for what the market needs today. That is one part. And the second part, those who are already in these kind of jobs are also upskilled. Two very crucial things that we'll have to do to make sure that they readjust to the new scenario.
Well, speaking of future opportunities, Mr. Krishnan, PLI, of course, that's gotten a lot of headlines already. But the electronic component scheme, what has the response been like? If you could share that with us for the ECS scheme, sir, and in terms of the approvals for the projects as well?
No, we have, as you know, 249 applications in all. We have taken up an evaluation of those applications as we speak, and which is why we were able to immediately come out with our findings on the 7 applications. The remaining as well, we are working on, and we will be making fresh announcements soon. And this is an ongoing exercise quickly. And as you know, the scheme guidelines also state that those who are able to bid out first and they can claim the incentives first. Those who commence production first get the incentive first. And therefore, it's important that we give them their approvals as quickly as possible. So whoever is ready in every sense, the approvals will come.
Well, let's talk about the PLI scheme then. So that's been the big success story for the electronic sector. We've seen record numbers coming in specifically as far as the set to see the sunset on the incentives. Is the government considering an extension? Are you actively looking at that?
We are examining requests from industry for a continuance of the PLI. So we will have internal discussions in government and finalize what our view would be.
Okay, so no clear answer there, but consultations underway. The budget is not very far either, Mr. Krishnan. What is the top priority of consultations to the finance ministry? AI mission or phase 2 of the semiconductor mission? Which one would you like prioritized?
As you know, I think the ISM 2.0 has been firmly put on the agenda by the Prime Minister. We also have what we believe are a few other good proposals. And we are also speaking to the finance ministry as to what we can take up and give them as our inputs for what needs to come into the budget, which and much of what we would have to suggest would be employment oriented, would also build greater capacities within the country. And I think all of those are important objectives of the government as a whole. And therefore, I hope like the budget has been in the past years, it will be kind to us this year as well.
Well, we certainly hope it's kind to you and it's kind to all of us as well, Mr. Krishnan. But at Semicon, which was not very far away, you had assured that there would be an outlay for phase 2 of the Indian semiconductor mission. Has there been a number that's been finalized, Mr. Krishnan, for phase 2?
It's not for me to reveal that number or state that number yet, nor has it been finally put down saying that this is the number it shall be. But yes, I mean, that will be the same.
Which will be more than the 10 billion for phase 1, I would imagine. But I know you have another meeting to run to, Mr. Krishnan. So before we let you go, we've got a room full of CEOs. We've also got a lot of young people here, professionals, students, entrepreneurs, startups. What is your message, Mr. Krishnan, to India Inc.?
I think as far as adoption of technology is concerned and making sure that technology across various enterprises in the country, it's a very important role. It's an almost all hands on board situation we are in right now. We are all committed to this objective of India becoming a developed nation by 2047. Viksit Bharat 2047 is a commitment that we all have. And if we have to grow at that kind of a pace, then all of us have to work together. And it needs to be everybody who participates in this effort to truly take India to that goal. The only route which is available really is through greater adoption of technology across a range of spheres, across various sectors, and in all enterprises. I think that should be the push that we work towards.
Well, Mr. Krishnan, it's been an absolute pleasure. Thank you so much for joining us. We were hoping that you'd be here with us at the GLS, but I know the duty calls. But, we would have liked to see you chat with the winning squad members of the women's cricket team. They're going to be here with us later this evening, as will several other dignitaries, including the actor Deepika Padukone and many others. So thank you very much, Mr. Krishnan, for joining us. Ladies and gentlemen, a big round of applause for the Secretary, Meti. Thank you very much for joining us from New Delhi for this.
Thank you. This day so far has been all about what's happening right now: markets, technology, policy. But here's what we haven't asked yet. Have we been here before?
Well, not exactly like this, but close enough to matter. Societies have collapsed before. Empires have had to choose between adapting and declining. Financial systems have imploded and been rebuilt. The patterns exist, and the understanding those patterns is what separates leaders who navigate disruption from those who get swept away by it.
Our next conversation will be led by Parikshit Luthra from CNBC-TV18 with a renowned historian, author, and senior fellow at the Hoover Institution, Professor Neil Ferguson, who has spent his career exploring how societies navigate moments of upheaval and transformation. Please put your hands together for Professor Ferguson, who is joining us live from Stanford.
Ladies and gentlemen, a very important theme today. The world clearly is in an upheaval, isn't it? We're looking at trade wars, which are not showing any signs of ending. India continues to negotiate with the United States, and we want to have a deal on our terms. We're also seeing great power competition between US and China. This is in future technologies, especially AI. The world is seeing two wars, one which is seeing a bit of a pause right now. Hopefully, this will lead to peace in the Middle East. The Russia-Ukraine war continues to rage on. What will happen to Europe? What will happen to multilateralism? Those are big questions for the future. And who better to ask than Professor Neil Ferguson? Professor Ferguson, thank you so much for being with us here.
Great pleasure to be with you.
Let me straight away begin this discussion. You're someone who studied centuries of financial crashes, wars, and pandemics. Today, we're clearly in a crisis related to weaponization of trade and natural resources. How do you think we will emerge out of this?
Well, I'm reminded of a British Prime Minister in the 1970s, James Callahan, who generated the memorable headline, "Crisis? What crisis?" After all, if one looks at the growth in the global economy, it's not exactly bad. India is powering ahead with growth forecast above 6%. Stock market is not too far behind the US stock market. If this is a crisis, it's really not too bad, certainly by comparison with some of the crises we've seen in the past. I think your question has to do with a crisis of international order. That, I think one could certainly say exists, partly because of the re-election of President Donald Trump and his resumption of all US trade partners. But I think also because China has pursued a pretty aggressive industrial policy over the last decade or so, and that has created a great deal of stress and strain for other economies. So I think the crisis that we see today isn't an economic crisis. It isn't a financial crisis. Of course, it's not a public health crisis like the one we saw 5 years ago. It's a crisis of international order. And I would say that by comparison with the crises of the international system of the 20th century, it's still a manageable one because it's a crisis that's focused on tariffs and export controls, not a crisis that takes the form of large-scale military action, with the obvious exceptions of the conflicts we've seen in Ukraine and in the Middle East in the past few years.
How presidents around the world, especially Donald Trump, has tried to vastly enhance his presidential power. To what extent will he be successful? And number two, how do you think Donald Trump's policies are likely to permanently impact how American governments, American presidents approach the world?
Well, I'm speaking to you today from Europe, and Europeans worry a great deal about President Trump. They have done ever since he burst onto the political scene 10 years ago. And their worry is that he wants to be an emperor or a dictator. And you hear similar fears expressed on university campuses in the United States, at Harvard or at Stanford, where I'm normally based. I think many of these fears are able to overthrow the Constitution, or even constitutionally get himself a third term, which would have to be through a constitutional amendment. He is quite constrained, as previous presidents have been constrained, by the separation of powers, which limits the power of the executive branch, as well as by the realities of economics and politics. His approval rating is in the red relative to where it was when he was sworn in. I don't expect Republicans to do well in the elections we're seeing this week, and I don't. So I think those people who think that the Republic, the American Republic, is on the brink of collapse are being realistic. I think they're underestimating the checks and balances designed not only by the founders, but also developed over nearly a quarter of a millennium, 250 years of the American Republic.
When it comes to the competition between India and China, how do you think that's going to play out for the future? The reason why I ask, we've seen a trade war between US and China, and after every 3 months, there is an extension of the truce. When it comes to the competition between India and China, you've previously written and said, it's like a race between the tortoise, which is India, and China, the hare. China's running too fast, and one day, the tortoise will catch up. What do you think India needs to do in order to be a global leader and catch up with China?
It's certainly very striking how well the Indian economy has performed since I said that. And I think it's as long ago as 2008 that I predicted that, as in the fable of the tortoise and the hare, that ultimately not only the demographic difference, where you can see China's population aging and shrinking very much in contrast with India's. And it's not just because of the very clearly different economic strategies that are pursuing. It's also because India is a free society. It has a free press. It has the rule of law. It has elections. And it's in that sense in a much stronger position than a one-party state in which there is an unaccountable party above the rule of law and in which you can never really feel secure in your property rights. So I take the view that India has a fundamental institutional advantage. And since I made that prediction back in 2008, you can see India's growth rate has gone up and China's has come down. There's really now quite a significant difference, especially if you're skeptical about China's growth data, which I increasingly am. So my sense is that with India growing above 6%, and Chinese growth probably heading down towards the low single digits, there's going to be a sustained catch-up. Now, India has a long way to go, and that's very obvious when you look at the manufacturing data. China is a manufacturing superpower. It's number one in manufacturing, far ahead, not just of the manufacturing value added of the United States. So there's a long way to go for India to catch up in those terms. But in other terms, if one looks at the economy more broadly, I think there's a lot of potential for India still to catch up. The obvious way in which India can strengthen its growth is not just to continue improving its infrastructure. It's been doing that for some time, but also to keep working at education, because one of the obvious differences between India and China is that while elite education is very good in India, primary education is not. And in that basic way, India's human capital lags behind China's. And if there was one thing that I would recommend that Indian policymakers focus on, it's just improving the quality of education at the lower social levels so that the average Indian is just better educated than is currently the case.
You're very right, Professor Ferguson. But I would also like to ask you about the long-term vision that a leader should have. I'm speaking about Prime Minister Narendra Modi. He has a vision of India becoming a Viksit Bharat, a developed nation by 2047. Is there an example that he could follow? What do you think the Prime Minister of India should have as its vision?
Well, I think it's important to give Prime Minister Modi his due. He has succeeded where previous prime ministers failed in getting India's economy to overcome what seemed previously to be insuperable barriers. When I first went to India and traveled widely there, now more than 20 years ago, there was a general view that you would never really overcome the bureaucratic and political barriers that stood in India's way, that the infrastructure would somehow never get upgraded, and therefore there would never really be sustained high-level growth in India. That has been radically changed in Narendra Modi's premiership. But as I said already, there's a long way to go. And targets like 2047 are somewhat arbitrary. The key question in my mind is how far the government can work to improve those foundations of prosperity that are so indispensable. I mentioned education already. The other one is public health. Rural poverty remains a reality in significant parts of India. There are, in a sense, two Indias, the India of Bangalore or of Mumbai, which when one visits today feels like first world India, but then another India which remains rooted in a past of rural deprivation. It's a hugely difficult thing to tackle, but we know from the experience of other Asian economies that it can be done. And so I think the big challenge for India is not to reinvent the wheel, but actually just to learn best practice from other successful Asian economies. And I don't think China is necessarily the role model, because I don't think it's appropriate to copy China. Far too much power is in the hands of the Chinese Communist Party and state-owned enterprises. Better, I think, to look at some other Asian economies that have modernized as democracies. South Korea, for example, is a pretty impressive role model and a place that I think increasingly has set a standard for how an Asian economy can economically modernize and politically thrive as a democracy. So my sense is that India still has some straightforward, low-hanging fruit to grasp. It's just a matter of a sustained effort to improve education, public health, and reduce the poverty of rural areas.
Professor Ferguson, I'd like to ask you about the trends that we see today. There is a AI-related disruption. There are trade wars going on. We're seeing inflation cycles. What permanent shifts do you expect in the world order?
Well, I would think of the world as being in a second Cold War. I think that's been true since 2018, if not earlier. And that's because China has essentially taken on the role that the Soviet Union played in the first Cold War. That is to say, it's the communist-led authoritarian regime which is challenging the United States and its allies technologically, ideologically, and geopolitically. And the situation of so-called middle powers, such as India, or for that matter, the European Union, is how do you adjust to a new Cold War? We had a very pleasant interwar period from 1991 when the Soviet Union collapsed until around 2012 when Xi Jinping came to power in Beijing. We think of that as an era of globalization. It's clear that we're living through a period in which globalization is in retreat, partly because of tariffs, but also because I think there's been a general backlash against globalization. If you think about the world in that framework, then it's clear that India has a different strategy from its strategy in the first Cold War. In the first Cold War, the Indian position was, we're not aligned. We don't really want to be caught up in this superpower conflict. We'd like to be, in a sense, aligned with neither superpower. In more recent times, in the second Cold War, India has tried to be, in some ways, aligned with both. I've called it the polyamorous strategy. And I can remember Minister Jaishankar boasting a couple of years ago at the Munich Security Conference about India's ability to have it both ways, to have a relationship with China and the BRICS, and also to have a relationship with the United States. I think that's over. I think that ended this year. And it's now very clear that India has to make sure that it is on good terms with the United States, because it clearly has too many points of conflict with China to be in a truly comfortable relationship with Beijing. So this is a very different kind of Cold War for India. And India is, of course, a more economically significant country than it was back in the first Cold War.
You know, you've made a very important point about India being non-aligned. Do you think believing in multilateralism, being committed to multilateralism is going to work with India in the future? The reason why I ask is because we have an adversary in Pakistan, we have an adversary in China, a relationship which we are trying to manage. US was a time-tested ally, but because of President Trump's policies over the last few months, some of the foundations of that relationship are now being questioned. It seems that when it comes to crunch time, when it comes to a crisis, you are always fighting alone. Which relationship should India really bet on?
It's pretty hard to have it both ways in the world that we're discussing. And I think the Indian attempt to repeat the non-alignment strategy, or what I call the polyamorous strategy, has basically failed. Rather in the same way that Brazil found itself on the wrong side of President Trump's tariff policy, so did India. And I didn't find that terribly surprising. After all, if you think about reciprocal tariffs, they're supposed to be a response to the high tariffs of other countries. Well, India actually had some of the highest tariffs in the world. If you look back to the beginning of this year, it would have been kind of amazing if President Trump had announced reciprocal tariffs and not hit India quite hard. But I think it came as a shock to the Indian government, which assumed that it had a kind of pretty good relationship with President Trump. President Trump is somebody who can combine good personal relations with world leaders with pretty adversarial policies. And I think this is the thing that makes him quite hard to read. From India's point of view, for the reasons you've given, the problem of Pakistan the problem of China, which historically has been close to Pakistan, it's very hard for India not to align itself more with the United States than with China. Remember, China now has relationships with Russia, with Iran, and with North Korea, the axis of authoritarians, that in their various ways pose problems for India. Now, India can free ride in some measure, for example, by getting oil from sanctioned Russia, but that's not something that sits well with policymakers in Washington. My view is that it was a mistake for India to boast about having it both ways. And now India finds itself confronted with a stark choice. Are you with the United States? Are you with the West, as we used to call it? Or do you want to be hanging out with the BRICS? And I really don't think the BRICS is the place to be.
Thank you so much, Professor Ferguson, for joining us here for a very enlightening session at the Global Leadership Summit. Ladies and gentlemen, a big round of applause for Professor Neil Ferguson. Clearly, the world is becoming very, very inward looking. India has no choice but to continue betting on multilateralism. Thank you very much.
Thank you, Professor Ferguson, for joining us this evening. You really made us think differently about what we're facing. And thank you, Parikshit.
Well, our next conversation is about how policy is being reimagined in real time, how data and technology are changing the way decisions are made, and how cooperation between the center and states is shaping India's next growth chapter.
Leading this conversation once again is Shireen Bhan, and to inspire us with his insights, we're joined by BVR Subramaniam, CEO, Niti Aayog. Please join us in welcoming him.
Ladies and gentlemen, a big round of applause for the CEO of the Niti Aayog, Mr. BVR Subramaniam, who's had quite a harrowing morning trying to get from Delhi to Mumbai today because we've had technical glitches at the Delhi airport, which has led to significant delays. So thank you for braving all of that, Mr. Subramaniam, and still being here with us at the Global Leadership Summit. You know, I want to pick up where Neil Ferguson left off, and he said that we're living in a world where India, in his words, quote unquote, cannot be polyamorous anymore. You will have to pick a side. You will have to make a choice. Is it the US or is it the BRICS? I want to understand from you, do you see this as a choice that India will be forced to make as well, given what President Trump and the Trump administration has decided to do?
So I think that's a very, a very one-sided view, which I heard just now. I think the situation is a bit more complex. Let me take a minute or two just to explain. Just look, there were a lot of certainties since the Second World War. You had a Washington consensus, you had a consensus on free trade, you had the WTO, you had a general belief in multilateralism. All the certainties seem to be going. So the world is in flux. What does that mean? It means you just look at it economically. You see a world where trade is flat, FDI is flat or declining. The world doesn't know how to handle this. And what we are actually heading for is a world where low growth is a norm. We were growing at about 3.5%, 3.7% trend globally before COVID. But in the last few years, the trend seems to be sub 3%, and that's what it's going to be. And in all this, India is a standout case. I mean, it's the brightest spot in the global economy, and that's what makes it important in the context of what you asked. It's bright because it's got size, it's got a market, and it's got innovation talent. Given that, I think India will be a pole which will attract everybody else. So rather than us being forced to make choices, others will be compelled to actually reach out to India. And I think that's the sweet spot India is in. So it's not necessary for India to take sides. People will cut their own cloth to adjust to India. I think that is what it is. I think, and I think that's the way the government is actually moving. That we have and there's another thing. We are doing good, and we are doing very good because there are strong inherent strengths. And I think if you have to live in the slightly more turbulent times, be it war, be it economy, be it tariffs, build up your internal strengths. The more you build up your internal strengths, the more the world will actually look at you far more favorably. You will be compelled to make far fewer tough choices.
Well, you know, one tough choice, of course, at this point in time that we know that we're grappling with is, of course, how do you engage and how do you deal with the US? The US has put forward what it wants India to do, especially as far as Russian crude, etc., is concerned. And we've made our position known, and we've hopefully made our position understood as well. But given the almost sort of, you know, it's an unyielding piece at this point in time, how do you see this playing itself out in the long term?
So I think things have been a bit difficult with the United States. And I think a reset is being tried. The trade negotiations are on. I wouldn't like to preempt anybody. Hopefully, end of the month, we may hear some news on that front. Having said that, what the US government is saying and what the US corporates are saying are totally different. You're still continuing to have the steady stream of foreign investors coming to India. You've got American companies opening global capability centers in India. You don't see anybody lessening their importance being given to India. So that basically means the fundamental attraction of India will trump everything else.
Will trump everything else. That certainly is a hope, and that does deserve a round of applause as well here for Mr. Subramaniam. But, you know, Mr. Subramaniam, irrespective of what finally happens as far as the India-US bilateral trade agreement is concerned, you've always been a very firm believer in the fact that India must actually cut its tariffs, that it's in India's interest to bring down its tariffs.
There are a couple of things. Let me elaborate a bit. You know, we want to be a Vikasit Bharat, which means we want to be a developed nation. If we want to be a developed nation, we must have a long-term goal, which has been set. The Honorable Prime Minister had made it very clear. We should be a $30 trillion economy, $18,000 by 47. There are some principles which we should not forego, irrespective of what happens. Number one, don't forego openness. You need to be a world-class country, irrespective of how anybody else behaves. I mean, just because there are tariffs in one part of the world, the rest of the world hasn't changed its behavior. I mean, you still have a COP going on next week, irrespective of somebody not joining it. So I think the importance of that is something we need to realize, openness. Second, we need to be a leader in green transition and addressing, you know, the clean energy transition. Extremely important. They're core principles. And the third one, focus on our people, focus on our strengths. That means invest in people. As long as you invest in people, I think you're pretty good.
You know, and to the point that you made that India must remain open for the benefit of the people who are watching. Last night, the finance minister in a conversation also mentioned that India's Atmanirbharta policy should not be seen as an isolationist policy. And that's the point that's being made here by you as well, Mr. Subramaniam. But, you know, Niall Ferguson was also talking about the low-hanging fruits that India must address in order for us to be able to do the 8 to 10% growth ambition aspiration that we have to fulfill. Now, from Niti Aayog's perspective, given where we find ourselves today, domestically as well as globally, what would you prioritize?
Okay, so look, this is a country whose fundamentals are very good. You know, fiscal prudence is there, inflation is under control, demography is in our favor, and I think that's okay. So what do we need to do? We need to do a couple of important transitions, and I think that's priority. First, we need to make a transition from agriculture to industry. I think that's long pending. A lot of emphasis has been given in the recent past, PLIs, this, that. But I think the transition to manufacturing of two types, high-tech advanced manufacturing on one end and labor-intensive manufacturing. One takes you to the cutting edge of the world economy, the other creates jobs. That's absolutely important. And I think that was the biggest announcement in the last budget, which is the National Manufacturing Mission. And I'm hopeful that by the end of November, the mission will be up and running. The NMM is going to transform India's manufacturing landscape. It's going to be a very different approach, quite different, not throwing money alone, but actually focusing on building capabilities. So that's one. And the second thing is, we think of services as just restricted to the IT sector. Services in India have become synonymous with IT. Services are more than 150 sectors, you know. You're in the service sector. Yes. And this is also an area because services have one advantage. Services are people-driven. It's a great employment generator. If you look at it globally, only 30% of Indians work in the service sector. It's 60% of our economy. So this is where we need to grow, which means what? Education, healthcare, professional services, entertainment, transportation, all this tourism. This is huge. And I think we have barely scratched the potential. And that's the other area of focus, which means what? Services means people. Invest in their training, improve their talent, make them high tech. And that's when you become global. So manufacturing and services and the transition from agriculture, I think, are the big bets for India to become Viksit Bharat.
Let me pick up on the headline that you gave us, that the National Manufacturing Mission is going to be rolled out at the end of the month. And that's a big one because that's something that we've all been waiting for. You also said that it's not just an issue of throwing capital at the problem, that we will have to reimagine the way that we look at the manufacturing sector. Leave us, I don't know how much you can share with us by way of details ahead of the launch itself, but what is going to change for Indian manufacturing? I ask you this in the context of the fact that for over 10 years, more than that, we've been talking about going from 15% to 25% manufacturing share to GDP. Will that finally happen?
So actually, let me tell you, manufacturing has had some remarkable successes in the last few years. And we have learned in the process. I mean, mobile phones is a success. There are a couple of areas where there have been successes. We've also learned from where we haven't succeeded as much as we wish to. The first thing which we have learned in, say, mobile phones is you can't bet on a product. You need to bet on the entire ecosystem. So that's one thing. So you need to have an electronics ecosystem. You need to have a pharma ecosystem. You need to have an ecosystem for semiconductors. So there's a whole range of ecosystem stuff, number one. Number two, don't spread yourself too thin. Focus on specific areas, which means focus on clusters. Pick up 15 sectors, pick up 5 clusters for each, 75 locations which are going to be global in size, capability, and actually employment. I think that's the buzzword. You know, when China began, it began with one cluster. And once that succeeded, they just replicated it. We're just going to do something like that. Pick up clusters, pick up areas which you want to focus on, where you have inherent strengths, which are demonstrated or can have strength, and then put everything you have in it, like not just money, skilling. You need people around. If somebody asks, why do you make a siting decision for a factory? They don't do it just because there's a market. They look, where do I have talent? I mean, day before yesterday, I was in Bangalore at a skills summit, and what were they talking about? Bangalore is a destination not because it has the best incentives. Everybody else gives best incentives. What they say is Bangalore has the talent. And I think that's the primary thing in today's work when you want advanced manufacturing. So this cluster-based approach is going to be the key to manufacturing, but cluster-based across the ecosystem. And I think that's the big thing. And I'm very hopeful. There's another thing that's happening. We must understand that the manufacturing space is being vacated by many countries. China is vacating a lot of manufacturing space. There are other countries who are filling it in. So I think there's a huge potential. And what is the potential arising out of? It's arising out of our demography. We have a 1 billion strong workforce. That is the biggest workforce in the world. I mean, 2/3 of Indians are in the workforce, 65%. That's huge. So you just need to create an ecosystem which can absorb this workforce. You create jobs, you create economic growth.
You know, I'm going to push you a little bit on that. So you talked about clusters, and what we have seen successfully as perhaps one of India's post-liberalization success stories is what we've seen with the auto ancillary sector and with the auto sector. What are the 5 champion sectors, if I may ask you, you believe we should bet on from this cluster approach that you speak of?
Okay, so that I would categorize these into 3 groups. There would be one where we are already global players. There are another group of sectors where we have some strengths, but we are not yet there. And there are some where we need to be because they're important. We're probably going to pick up equal number of sectors from each, 4 to 5 in each of them. So if you look at areas where we have inherent strengths and we are already globally strong, automobile certainly is one of them. Pharma is going to be the other. On the labor intensive side, textiles and garments is the other, and also leather, footwear, etc. 2 are labor intensive, 2 are going to be capital intensive. If you're looking at areas where we have some skills, but we are not yet there, we're not global or world class, capital goods is one. I mean, that's something where we need to be there. You can go through and you will see there are many, many areas where we are just about there, but not, champions. And there's some futuristic sectors, be it, semiconductors, be it EVs, be it other stuff, be it transportation, robotics, we need to be there. So there'll be a pretty decent selection of areas. And I'm sure This NMM is going to be the transformative lever. It's going to be our big bet.
It's going to be our big bet, the new national manufacturing mission, as is being articulated here by Mr. Subramaniam. But, I want to go back to the first point that you made, that we're living in a world where trade is flat, where FDI is flat. Now, India has been trying to draw in foreign direct investment across different sectors, from semiconductors to AI and so on and so forth. Given the fact that there is this global uncertainty and nervousness, which seems to be impacting FDI, what worries you about our potential to grow at the rates at which we aspire without the requisite amount of FDI?
So I think this is going to be a topmost priority. Firstly, we need sustained growth of 8 to 9% for about 25 years. That itself is a big challenge.
Are we on the cusp of that?
We are on the
closer to
verge.
it?
We're doing the right things. I think from next year onwards, we should be touching those kind of numbers. I think that's the goal. And I think the policy levers are being tweaked, number one. If you want to have 8 to 9% growth, I mean, even if you have a capital output ratio of 4, you need 35, 36% of investment every year. We are not yet there. We're around 30, 31%, and it's been a bit flat at that. That additional 4 to 5% investment has two parts to the problem. One is, I think the government has been doing a lot. A lot of capex has been going. Households have been doing a lot. People have been buying houses, building stuff, etc. I think the private sector capex cycle needs to kick off. And one good thing is, thanks to the cut in GST, the GST festival that has happened, the reduction in income tax rates, the exemption limits being raised, I think more money is being put in pockets. You're going to see a boost in that. So that's the second. So the investment cycle needs to kick off. But on the other side, domestic capital is not going to be enough. So out of that 35, 36% that we need, 3 to 4% has to come from outside. We have touched 3 to 4% long ago, but that was a much smaller economy.
Yeah.
So 3% of a $4 trillion economy is quite different from 3% of a $300 billion.
So would you consider this one of your biggest worries today?
This is one of the biggest areas of focus where we need to be actually kicking up our FDI dramatically, and that's it. And the good thing is, you got all the major multinationals in the world looking at India, thanks to the uncertainties. There are companies which are just wanting to shift operations from one country to the other. What does this mean from us? They're interested in India for two reasons: domestic market, and we are one of the best low-cost destinations for manufacture. Having said that, we need to cut our paperwork. We need to cut our bureaucracy. The Prime Minister keeps talking about, minimum government, maximum governance, ease of doing business. Get out of the way of business. Make life easy. We don't want people to fly in with interest and fly back disappointed.
How much are we still in the way, though?
So this is the other area on which a lot of work is happening. If you actually tick the boxes on reforms, Government of India has probably done 90-95% of it. Take the Income Tax Act. It's about 2/3 the size of what it was earlier. 90% of the work now is left in the states. So we have a task force under the Cabinet Secretary. He is pushing day to day, without publicity, reforms at the state level. Every day I'm seeing some news item. For example, you want to convert agricultural land to industrial land, you need 1,000 permission. Andhra has just gone ahead and removed that permission. So it's a major transformation. I mean, why can't I be allowed to use the land the way I want it to be used? So a lot is happening on that. So I think the PM has been very clear: reforms. Cabinet Secretary working with states. We have two committees in Niti Aayog. One of them, by the former Cabinet Secretary, is called the High-Level Committee on Non-Financial Sector Reforms. They are focusing only on cutting down paperwork and waste. The first report covered 3 areas: environment, MSMEs, and the whole area about restrictions in manufacturing, etc. They're not public documents, but I'm seeing coverage in some papers. But even if half of them get done, that's going to be transformative. They're going to add 1% or 2% to India's growth.
But why haven't we seen them being done, and when do you hope that they will be done?
No, I think we shouldn't. I don't think there's any need to be sorry, because the reports have just gone out in October. So we're just about 4 weeks away from it. I think there's very high level attention. The highest level attention is being paid to that. So I foresee in a month or two, much before the budget, some of these things happening. I think the systems are working full time. You go to Delhi, nobody is asleep. They're working 24/7.
Well, that's the other big headline that's coming in there from the Niti Aayog CEO, that the reports, high-level committee reports on the ease of doing business across different sectors will be made public and will, of course, be part of the execution roadmap even ahead of the budget. But, sir, you talked about FDI and you said that drawing in FDI should be the biggest focus area. For this audience here, FPI flows is another big focus area, and the Indian markets have not seen the kind of FPI flows that we would have liked to have seen. And one of the aspects being talked about is the capital gains tax. Do you believe that there is a need, or this is the right time to review that?
I will put it that way. Global capital flows on the portfolio side happen for a lot of reasons. It's not just your performance, it's all relative. China suddenly became less attractive. A lot of capital came back to India. The China story changes, you will see capital moving out again. So I think there are larger things that are happening there. But I think the intrinsic worth of India as a destination for portfolio capital, I think continues to exist. There are two things, however. You're having a huge boom and spurt in domestic capital flowing into the markets. I mean, so one of the reasons that in spite of FPI not happening in the same extent, the markets have not have taken it quite well, is domestic capital is replacing foreign capital. Having said that, I think one area where there is huge scope for foreign capital come to India is, patient capital, what I call pension funds, insurance funds. They need to come into India on a much larger scale. I mean, take InvITs, for example, infrastructure investment trust. I mean, the NHAI has one InvIT, which is a public sector InvIT. They should be pushing for more private sector InvITs. And I think that's going to happen in the next year or two. There's going to be a lot of asset monetization from the government. That should be moved into the private space. These are the kind of assets which are not greenfield, they're brownfield. They're the ones which will attract patient capital. So I think the Canadians are in India in a big way. They've put a lot of money in the Indian market. But large areas, London, New York, their funds are not yet in India on that scale. And I think there is a need to, create enough products where they can put money, number one. Number two, it's not the rate of tax per se, but there are a lot of nitty-gritty things on the tax side which need to be resolved. I mean, Niti Aayog has a consultative group on tax policy. They have submitted 2 reports to the government, one on permanent establishment, the other one was on criminalization. Hopefully they are going to be seen. It's got representatives from the finance ministry in that. We're going to come out with a dozen more reports in the next 2 months. So the whole idea is, it's not about tax rates. It's about tax administration. If you improve that, I think there'll be a lot of, it's not the rate which is bothering. It's the uncertainty of interpretation which is bothering people. If you have certainty on interpretation, I think much more capital will flow.
Mr. Subramaniam, you've given us a long list of things that are work in progress and hopefully will get done. What's, if I may ask you, you believe the single biggest priority that you believe Niti needs to focus on, and through Niti or via Niti, the government needs to get done?
I've already spoken about manufacturing. Let me say one thing. When everybody looks at India, they're looking at the market. What do you mean by market? Market is people. So the strength of India is its demography. And if India has to become Vikasit Bharat, these people have to be skilled, educated, and they should have productive livelihoods. I think that's priority number one. If I was asked to put money and at just 1 rupee, I'll put it on skilling and education. On average, an Indian student goes to school for 67 years. South Koreans go for 13 to 14 years. That's the level of gap that we need to bridge. 4% of our industrial workforce is skilled. You want them to make high-tech stuff. You want them to be doing robotics. With 4% having skills, it's not adequate. Invest money in skilling. So Niti is actually working very hard. How do I improve the skilling ecosystem? How do I integrate it with the education system? Don't make it an extracurricular activity. Skilling is, education is skilling. It's just different path. And make them all interoperable and carry it all the way to graduation. We probably roll it out in 2 states, Andhra and Orissa to begin with. Hopefully it works, roll out in the rest of the country. I think that's the key to the future. If you have 1 billion people who are highly skilled, the foreign direct investment, portfolio investment, all of that will come.
Well, that's the other headline. Skilling is education, and that is what Niti is trying to push forward. Let me end by asking you, sir. We started by talking about the so-called polyamorous relationship. Let's bring China into the conversation as well. Re-engagement has started. Flights have restarted. Visas are being issued at this point in time. How do you see this relationship progressing, given the backdrop of what has happened in the past, but more importantly, looking into the future?
Look, the large economies in the world are important. So we will end up having some economic relation with them. If that country is 20% of the world economy, you can't shut off 20% of the world economy. That's reality. Whether we like it or not, maybe it's not a choice. They still end up being the largest, import source for us. That's because of the capabilities they have built up. So I think we will be engaging with them, but we need to keep 2-3 things in mind. A, when the Prime Minister talks about Swadeshi and Ardha Nirbharta, he's not talking of protectionism. What he is talking about is, secure yourself from surprises. See that not you're self-sufficient, but, you're self-reliant when necessary. I think if we keep that at the back of the mind, we can engage with anybody, be it a friend, somebody who's not so friendly, we will be able to do that. I think we need to de-risk our engagements. We can't allow our dependency on another country beyond a point. And that's a lesson we have learned in the recent past, particularly. Don't be over-dependent. And since you said it's the last question, I go back to just one point which I think is very important for India as a nation. A, if we have to become a great nation, it will be on our skills, our talent, our workforce, our manufacturing, our services. We need to grow them. And we need to grow them fast. We don't have much time. We have just 20 years, 25 years to do it. The world is going to change. And the problem is going to be, in 25 years, we are also going to be older. Our median age today is 29. In 25 years, we'll be 39. So the big thing is, grow rich before you grow old. And I think that is the vision driving Vikasit Bharat. Vikasit Bharat is not a choice. It is essential, because only then will India grow rich. And we need to grow rich before we grow old, because simultaneously, India is also aging. We have crossed the total fertility rate of 2.1. Indian population is going to peak in another 10 years. So it's important that we focus on becoming a rich nation pretty fast. There are others who have not managed it. They are in trouble. Thank you.
Become a rich nation before we become an old nation. BVR Subramaniam, always a pleasure. Thank you so much for joining us here at the CNBC-TV18 Global Leadership Summit and really laying out the roadmap across a whole host of sectors, a whole host of areas that India must prioritize. Thank you very much, sir, for your time. Thank you, sir.
Thank you, Mr. Subramaniam, and thank you, Shireen, for that insightful conversation. Ladies and gentlemen, one huge round of applause once again, please. And with that, we wrap up our morning sessions. Join us after lunch for more power-packed conversations. A quick heads up, Money Control is hosting a live markets quiz at their booth, and it starts in 10 minutes. Winners stand a chance to win Money Control Super Pro and Pro memberships. See you at the Money Control booth. Thank you.
right here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change.
And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience.
The future begins here. Book your spot at CNBC TV18's Global Leadership Summit, the second edition.
One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out.
Shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change.
And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience.
The future begins here. Book your spot at CNBC TV18's Global Leadership Summit, the second edition.
One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out.
here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change. And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience.
The future begins here. Book your spot at CNBC-TV18's Global Leadership Summit, the second edition.
One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out.
The future is being built right here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change. And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience.
The future begins here. Book your spot at CNBC-TV18's Global Leadership Summit, the second edition.
One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out. And there was a time, when we had very heavy flows despite so-called capital gains tax. So the sense I get it, there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it. When this tide will turn, whether it will so much as come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows. But sometimes inside, you will see there is a lot of movement into a primary market. And these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is we are not.
The future is being built right here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change. And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience.
The future begins here. Book your spot at CNBC-TV18's Global Leadership Summit, the second edition.
One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out. And there was a time, when we had very heavy flows despite so-called capital gains tax. So the sense I get it, there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it. When this tide will turn, whether it will so much as come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows. But sometimes inside, you will see there is a lot of movement into a primary market. And these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is we are not.
right here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change. And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience.
The future begins here. Book your spot at CNBC-TV18's Global Leadership Summit, the second edition.
One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out. And there was a time, when we had very heavy flows despite a so-called capital gains tax. So the sense I get it, there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it, when this tide will turn, whether it will so much as come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows, but sometimes inside you will see there is a lot of movement into a primary market. And these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is we are not.
The future is being built right here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change. And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience.
The future begins here. Book your spot at CNBC-TV18's Global Leadership Summit, the second edition.
One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out. And there was a time, when we had very heavy flows despite a so-called capital gains tax. So the sense I get it, there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it. When this tide will turn, whether it will so much as come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows. But sometimes inside, you will see there is a lot of movement into a primary market. And these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is we are not.
The future is being built right here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change.
And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience.
The future begins here. Book your spot at CNBC-TV18's Global Leadership Summit, the second edition.
One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out. And there was a time, when we had very heavy flows despite a so-called capital gains tax. So the sense I get it, there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it. When this tide will turn, whether it will so much as come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows. But sometimes inside, you will see there is a lot of movement into a primary market. And these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is we are not.
The future is being built right here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change. And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience.
The future begins here. Book your spot at CNBC-TV18's Global Leadership Summit, the second edition.
One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out. And there was a time, when we had very heavy flows despite a so-called capital gains tax. So the sense I get it, there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it. When this tide will turn, whether it will so much has come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows. But sometimes inside, you will see there is a lot of movement into a primary market. And these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is we are not.
right here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change. And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience.
The future begins here. Book your spot at CNBC TV18's Global Leadership Summit, the second edition.
One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out. And there was a time, when we had very heavy flows despite a so-called capital gains tax. So the sense I get it, there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it. When this tide will turn, whether it will so much as come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows. But sometimes inside, you will see there is a lot of movement into a primary market. And these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is we are not.
The future is being built right here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change. And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience.
The future begins here. Book your spot at CNBC TV18's Global Leadership Summit, the second edition.
One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out. And there was a time, when we had very heavy flows despite so-called capital gains tax. So the sense I get there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it when this tide will turn, whether it will so much as come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows. But sometimes inside, you will see there is a lot of movement into a primary market. And these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is we are not.
The future is being built right here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change. And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience.
The future begins here. Book your spot at CNBC-TV18's Global Leadership Summit, the second edition.
One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out. And there was a time, when we had very heavy flows despite so-called capital gains tax. So the sense I get there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it when this tide will turn, whether it will so much as come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows. But sometimes inside, you will see there is a lot of movement into a primary market. And these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is we are not.
The future is being built right here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change. And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience. The future begins here. Book your spot at CNBC-TV18's Global Leadership Summit, the second edition.
One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out. And there was a time, when we had very heavy flows despite a so-called capital gains tax. So the sense I get it, there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it. When this tide will turn, whether it will so much as come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows. But sometimes inside, you will see there is a lot of movement into a primary market. And these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is we are not.
here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change. And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience. The future begins here. Book your spot at CNBC TV18's Global Leadership Summit, the second edition.
One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out. And there was a time, when we had very heavy flows despite a so-called capital gains tax. So the sense I get it, there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it. When this tide will turn, whether it will so much as come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows. But sometimes inside, you will see there is a lot of movement into a primary market. And these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is we are not.
The future is being built right here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change. And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience. The future begins here. Book your spot at CNBC TV18's Global Leadership Summit, the second edition.
One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out. And there was a time, when we had very heavy flows despite so-called capital gains tax. So the sense I get it, there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it. When this tide will turn, whether it will so much as come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows. But sometimes inside, you will see there is a lot of movement into a primary market. And these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is we are not.
The future is being built right here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change. And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience.
The future.
Power-packed conversations lined up for you.
Absolutely, Arundhati. It's time to talk about what India is building right now. The ambitions are clear: a manufacturing hub, a services powerhouse, a key player in global trade. But can our financial architecture keep pace?
That's not rhetorical. We need deep capital markets, competitive financing, financial inclusion at scale, and trade corridors that actually function. Some of this is happening, other parts are lagging, and the gap between aspiration and infrastructure matters.
To lead this conversation, please welcome back Shireen Bhan, and joining her is one of India's most respected banking voices. Please join us in welcoming KV Kamath, Chairman of Jio Financial Services. Ladies and gentlemen, a huge round of applause for KV Kamath.
Well, good afternoon, ladies and gentlemen. It's wonderful to be back here on the GLS stage for our evening plenary sessions. And as I said, we couldn't have asked for a better start than to start with Mr. KV Kamath, somebody who knows India, somebody who's been deeply associated with India's financial services sector, and somebody who is and always will be a perma bull on India. Mr. Kamath, thank you very, very much for joining us here at the Global Leadership Summit, sir.
Thank you, Shireen.
Well, you know, Let me get started, sir, with the sector that you've, of course, been most involved with India's banking sector. And today, as is very, very evident and very clear over the last few years, we've seen India's banking sector revive, clean up its balance sheet, emerge much stronger. In fact, State Bank of India crossed 2 milestones yesterday, crossed the $100 billion mark in market capitalization, but also crossed the 100 trillion rupee mark in business. And I was asking CS Sethi, the chairman of State Bank of India, what's the aspiration from here? And he said to be amongst the top 10 banks globally in the next 5 years. Mr. Kamath, that is an audacious aspiration and an audacious ambition. Do you think that India's banking sector is poised to break into the top 10?
Firstly, my compliments to State Bank in achieving these 2 milestones. My answer is certainly yes, for a simple reason. This would not have been possible if we are not growing at the pace we are growing. And it would not have been possible if the banking sector was systemically not as strong as it is today. So given these two things, we will reach the aspirations set by State Bank of India and indeed other bankers. Again, sometimes I look back to see what I can see ahead. And when I look back at say China, circa 2000-2005, that period is when the banks started bulking up, and that's where you could see the pace of I would say growth go into double digits. So I think our steady growth of 7% or that range should take us to that sort of bulking in the next few years.
You know, and yes, SBI has also upped its credit growth guidance to between 12 and 14% for the year. But, you know, in terms of the next stage of reforms for the banking sector, and to talk specifically about public sector banks, Mr. Kamath, the expectation is that we're now going to see the next wave of consolidation as far as public sector banks is concerned, because the government wants not just world-class banks, but also world-sized banks, so bigger banks. Do you believe that consolidation is the answer?
I entirely agree with the government's path for a very simple reason. Historically, consolidations have happened, at least in the Indian context, when things were not good. I think this is the first time when things are good and you're consolidating. And what does consolidation get you? It gets you scale and gets you bulk, and gets you, I would say, efficiency of operation. And all these are critically important today, and even more so when you're talking of, I would say, a technological revolution that you're all going through. So this is absolutely the correct move at this point in time.
Correct move at this point in time. Another possible move is the consideration to enhance the FII limit for public sector banks, which is capped at 20% currently, to 49%. The PSB view is that this gives private sector banks an unfair advantage when we talk about FII participation. It doesn't actually dilute equity at all. Why not do it?
I entirely agree. The playing field has to be level. Why should there be a playing field which is different for private banks and different from public sector banks? Over the last whatever number of years you want to count, the public sector banks have played a major role in the banking system, and I don't see that changing. So you need to have a level playing field going forward.
You know, while we level this playing field, so to speak, Mr. Kamath, what gives you the most confidence about what we're seeing in the banking sector and in the larger financial services sector? When we last spoke, you said banks don't need to worry about other banks. They need to be worried about what's happening on the fintech side. They need to be worried about tech companies who are also doing banking. You know, as you look at the landscape and how much it's changed today, where do you find confidence and where are your concerns?
Yeah, my biggest confidence is the fact that what gives me the biggest confidence is the fact that the bank balance sheet is clean. If we were having this conversation in a situation where bank balance sheets are not clean, profitability is not at healthy levels, then we would have probably gone in a different direction. So banks are strong, and banks can today compete. So they have capital, they have people, they have understood how to use technology. So they have all the elements. What is required is to understand how the new player, what I call the new any fintech or any player which is not a bank but is agile in using technology, how are they acting, and make sure that you keep pace with them. That is a challenge. So that challenge exists, but I think it's a challenge you can overcome. And that's where I think in another session that I was having with one of your colleagues, I said that banks are spending money, but they need to spend it where in a competitive sense it is most productive.
Which means to actually acquire capabilities, to acquire some of these new cores that you spoke of?
No, not necessarily. What I mean is to put in the right technology that is appropriate for today, rather than do more of the same thing that we were all doing over the last few years.
Yes. So to disrupt yourselves using technology, but few years. Fueled by domestic participation and domestic capital. Has that surprised you? And given the unlock that we've now seen happen, what is the kind of headroom for growth that you foresee?
No, I think the India story is driven by two or three things. I think firstly, it is the long runway that we have. So that gives you headroom. If you did not have a 25-year growth runway, and why do we have that? Because I would think most of India is still to be built. That act of building itself provides the momentum. Again, you look at how growth has happened in other domains in the last 30, 40 years or 50 years. Japan first, Southeast Asia, tiger economy, Southeast Asia, China. You see the transformation journey starts with building what you don't have. And that itself propels you to a status where the next leap becomes easier. I think we are well on that journey. So that headroom we have. Then comes the question that is often asked, where's the capital?
Yes.
I think now we have clearly shown that that question has been asked for now at least 30 years that I've been in banking. Not the 50 years I was in development banking, but the 30 years that I've been banking, that question has been asked, but where is the capital? I think the India story is what I would call a very measured growth. The government has always been careful to make sure that we grow at a pace which we have the ability to support. But today, I think we can grow at a faster pace because the access.
What is a faster pace, sir?
I would say that we should actually aspire for a 10% growth rate, and then we will achieve 8%. So that's what we need to do. And also, and I'm very happy that the index is being reset, say industrial production or various indices, because we will then have a better picture of at what pace are we really growing. I would think that we're probably growing a little faster than what we all assume.
Than what the numbers reflect at this point in time. Yes, and that review is, of course, underway at this point in time for metrics that measure inflation as well as growth. But, Sakamat, you talked about this aspiration of getting to 10%. And you said if we aspire for 10, we'll probably get 8. If you were to look at the landscape today and the measures that have already been taken, this year, the effort seems to be to boost consumption. We saw the income tax cuts, and we've just seen the indirect tax cuts by way of the GST. What next would you prioritize to really get to that 8 to 10% number?
See, I think we have to get on to what I call a virtuous cycle. Consumption is one part of that virtuous cycle. Investment is the other side. And the question could be, where do you invest? As I said, that's where the long horizon comes in. So you've got enough to invest. And as GDP goes in, aspirations change. That's the third part of it. So this keeps the momentum going. Now, again, historically, we would, that rhetorical question that I said, but where is the money to fund this? And that question has now been answered. Now, a classic case that I would use to say how this got addressed is NHAI. NHAI, we used to I'm talking of NHAI, say 10 years back or so. How will NHAI fund all the highway needs of this country? Just didn't seem possible because it would otherwise take a larger and larger portion of the budget. But today, that issue is a non-issue because what they have already put in place is now getting tolled properly. And that tolled road is now you create an INVIT out of it, and you have a funding which is not thought of or could not even have been conceived of 5-10 years back. So basically, we are creating new avenues to fund ourselves, and all this without necessarily looking at foreign capital. If I look at last 5 years, most of our growth has come through domestic capital, unlike most other domains. So we have got a lot of levers to push. We are on that virtuous cycle, and I think we will keep pumping at a good pace.
You talked about where is the capital and new avenues to actually find that capital. I was just speaking with the Niti Aayog CEO the last session at the Global Leadership Summit, and he talked about InvITs, for instance, as a means for us to be able to raise capital. REITs is another example. What next in terms of instruments that you believe could be relevant as we look at capital and growth?
The InvITs and REITs. InvITs is what I meant when I talked of NHAI. And REITs is now becoming the default structure for real estate. These are areas which you never thought of that had a solution, but we have found a solution. I would think that there is, both InvITs and REITs, we are just at the start of it, at the start of the process. And that could become a huge source of funding for institutions. Now, the capital market is itself a large source of funding. So you mentioned about equity, the cult of equity and people putting money into equity. People also have other savings products, which require debt type instruments to, at the back, other end of it. So whether it is insurance, whether it is pension, a large part of, that will have to be invested through debt instruments. Those debt instruments are accessed through the capital market by people who grow India. So there's another virtuous cycle that is getting built there. So to me, you got banks, you got the capital market, and you got this structure under which you create an InvIT. Gets funded through the capital market. So you, from just maybe a unitary source of financing 10 years back, today you've got multiple sources. So that's why I said that funding is not going to be a problem. It is going to be, who does it best and how do you do it best? Because the other question that you asked, banks, growth of banks. We have not yet explored what will be demand for bank credit from the retail sector as India goes from 5 trillion to 10 trillion. Nobody has estimated it. I've not seen a single number.
What is your number, sir?
My number is just look around elsewhere as to what is it as a percent of GDP. And then you will get an answer. I don't want to give an answer. Some homework is required. Look at what is the retail debt to GDP in 3 or 4 domains where we are. It's at least twice of where we are. At least twice of where we are. So that itself gives you demand for a long time. At the same time, corporate demand from banks may not be what it is. So these shifts will happen because the capital market is providing those monies. Companies are better leveraged, so they don't need to borrow as much. They don't need to borrow short term. Long term, they'll borrow from the capital market. So the banks will have a place in terms of providing working capital and shorter tenor, which is appropriate to their funding profile and retail credit. Whereas the capital market will provide the rest of it. So we have what I call a system which is in harmony, which will provide for this next journey from 5 to 10. Because there's another journey, 10 to 20. And it's not going to be that far behind. 5 to 10 is going to take 6 to 7 years. The 10 to 20 journey is on us very, very quickly thereafter.
Very quickly thereafter, since we're talking about the capital markets, 2 questions. Something that we've seen through 2025, the emergence of India, what is now being called as the IPO factory of the world. You talked about some of these new cos in the fintech space. We've seen 1 or 2 of them list, and we've got listings lined up in the fintech space as well. What do you make of this move of these startups, these new age companies to the Indian equity markets, and what that signals and what it could potentially mean in the medium to long term?
I would look at it in a very positive construct, and that is that the governance of all these companies that are coming to the market is now going to improve. Not that they were not well governed, but they will now be subject to market discipline. And that itself will strengthen the core of what is happening in India. So these companies will now be an integral part of the growth engine of the country in a way that you expect it to be. And that's for the good. So I welcome all the new issues that are coming. As long as, before the issue was made, it has been properly vetted and properly brought to the table, as it were.
the valuation debate is on as well, sir. I mean, not just as far as IPOs are concerned and IPO pricing, but also on valuations as far as Indian stocks are concerned. Are we too expensive? Is that why we're not actually seeing FPIs come in? Or is it more the capital gains issue along with the global environment? What do you make of the reluctance of FPIs to enter the Indian market at this point?
Actually, at this point in time, if you're trading at around 22, do you have space for these foreign investors? You'd have created a market which is too hot to handle. I think if you're finding the market, just now priced a little higher than where people might have been comfortable, I'm comfortable with this price because
You are comfortable?
Yeah, for a growing economy, this is the right price. There could be individual issues which are not at the right place. That's exuberance. But overall, the market is not at a price which is too high and dangerous. So I'm comfortable with this.
Are you also comfortable with AI valuations and what we're seeing happen globally? Of course, that's not part of the India story, at least at this point in time. But what do you make of the AI boom? And do you believe that this will perhaps be the one area where we need to move much faster, given what's happening?
Shirin, if you look back at same sort of dialogue was going on during the dot-com boom. Most of the people here would have been too young to know about that. I've lived through that, the sort of hype that happened. And there are companies which actually listed on NASDAQ saying that I have no business plan. I don't know whether I'll be in business. And I don't know when that would be if I get into business.
But I'm a dot-com company.
And the dot-com company, listed. So those are the sort of tales that you heard. So things are not that bad today. And you can clearly see some of the benefits. But to me, at this point in time, a bit of the hype has to die down. And then you will really understand what exactly do these companies do and how do they bring value to the table. So I will let it ride. And in a way, our not being in the midst of it in India is a good thing. That is, these companies, we should adapt to the extent that we need to adapt. I'm saying we are not late to the party for a very simple reason. You take it, any technology that has come in the last 25 years, being late to the party has been always good. Because you could get in and use that technology when the cost of the technology had probably come down to probably 20-25% of what it was at the beginning. So I think we lose nothing by waiting out 6 months, a year and a half, 2 years, and joining the bandwagon when costs have come to what I call reasonable levels. So, and we have seen that happen in every single area.
So don't suffer from FOMO.
I'm not worried at all about FOMO. Better be out of it at this point in time.
Better be out of it at this point in time. One of the concerns, though, that was again shared by the Niti Aayog CEO was that India needs to move faster in order for it to get richer before it gets older. Because for so long, we've been talking about our demographic advantage and our demographic dividend, but perhaps the time now is to focus on the fact that we're also fast becoming an aging population.
He's right. He's right. Within that construct, we'll have to see what is it that we can grow at. And as I said, 7 to 8%, aspirational 10% is, I think, a right number, given all the governance structures we have in place. Maybe in another economy where there were different governance structures, they could have grown at double digits and the low teens and the mid-teens. We can't. Given our checks and balances, we need to grow at this pace to be stable. So I think the journey of Viksit Bharat 2047 to be developed is a very well articulated journey. And we can look at 2 stages in it, go from where we are to maybe 17 to 20 trillion, and then from there to the next step by 2047.
I also want to ask you, Mr. Kamath, about what you're seeing happen globally. There is, of course, a retreat from globalization, but there's also a retreat from multilateralism and from multilateral institutions. You were part of a multilateral institution. What do you believe that could potentially mean for the world and the rules of the game as we have come to understand them over the last many decades?
Multilateralism is not going away as such, because the next wave of handholding will be required across Africa. Multilateral institutions have been holding hands where the growth journey and the developmental journey could not be done by a nation on its own. 50 years back, we were in the same thing. Again, most of you probably were not born then.
We're not that young, sir.
How was I when ICICI was born? in 1955, most people would not have been here, would not have been there. How was ICICI funded initially? Through loans from the World Bank. Later on, it was loans from the German institution KfW. Later on, it was the Asian Development Bank, and then some government support to raise bonds. So this construct whereby the global north, as it were, supports the global south, I think will continue to be needed in several domains. Would it be needed in India in a big way? No, because I think we will graduate, but other countries will need. So in terms of the financial structure, financial architecture, certainly multilateral institutions will have a role to play. Will other multilateral institutions have a role? I think that's a question that will be asked as we go along.
You know, I want to end, Mr. Kamath, by asking you, but something that I know you were deeply involved with, and you actually had numbers on your side, and that is the participation of women in the workforce, and you very successfully did that at ICICI Bank. As an economy, India cannot afford to not have women participate in the formal economy. We've seen a slight improvement in the metrics, but the journey is long. What is it that worries you on that front? But more importantly, what is it that you believe we need to focus on as a nation?
See, as a nation, if we keep to the target of growing at the pace we have been talking of, 7 to 8%, I think everybody will be mainstream, because that growth will not happen if there is only a lopsided employment that happens. The second was access to and the mindset to do what I'd call the sort of subjects that are relevant to today's India. That probably was absent a few years back. But today, I see women taking up STEM. There are more women graduating with the STEM courses and others. So with the evolution that is now taking place, the new technologies and so on, I'm equally sure that there will be more women, if not more equal number of women who will take these courses as men. So I would think that we will grow in what I like to call a gender neutral way.
Well, that does deserve a round of applause. I hope we do grow in a more gender neutral way. Mr. Kamath, if you were given the task of a headline that captures the spirit, the mood of India in 2025, as we look into 2026, what would it be?
I would simply say 10 trillion, here we come.
10 trillion is here we come.
Yes, here
10
we come,
trillion,
yes.
here we come.
Yes.
KV Kamath, always a pleasure. Ladies and gentlemen, a big round of applause
Thank you,
for
Shirin.
the veteran banker and the perma bull on India. Thank you very much for your time, sir.
Thank you, Mr. Kamath and Shireen, for that conversation. That was a comprehensive look at India's financial infrastructure and global positioning. And now let's drill down on one specific shift that's happening right away. Indians have been savers for generations, bank deposits, gold, real estate. But something's changing. More households are looking at equities, mutual funds, and alternative investments. The financialization of India is underway.
So what does that mean for the economy, for financial institutions, for how risk gets distributed across millions of households? To lead the discussion, please welcome Prashant Nair from CNBC-TV18. Joining him are Mark Pilgrim, Managing Director and Chief Executive Officer of Geo BlackRock, Vikram Sahu, India Country Executive at Bank of America, and R.G. Manilak, Senior Vice President and Head of APAC FinTech at NASDAQ. Ladies and gentlemen, please join us in welcoming them all.
Thank you very much for that. And I think the session with Mr. Kamath has really provided a really foundational, fantastic perspective. I mean, he said, well, 5 to 10, and then 10, here we come, and then 10 to 20 even faster, right? So I hope that's the case. Now, when we talk about financialization of India, it's really one of the most fascinating shifts underway anywhere in the world. And, you know, we all know the numbers, the number of demat accounts, unique individual investors, etc. But a country with barely $3,000 of income per capita per person, yet the kind of access that we've built to financial products because of Aadhaar, UPI, and of course, I mean, 80% mobile penetration, digital broking. I mean, it's almost unmatched globally. But as we move from a nation of savers to a nation of investors, a few big questions emerge. Does this trend still have mileage, or have we already hit kind of cruising speed What are the next frontiers in access, innovation, technology? AI is, of course, continues to be a big buzzword. I mean, will that be, incremental, or will we see some revolution because of that? And finally, what are the pitfalls, the risks that come from speed, inclusion, and I don't want to use the word over-financialization. I don't know if Mr. Kamath is still here. To help us decode that, we've got three people who sit right at the intersection of finance, technology, and of course, investment access as well. Gentlemen, great to have all of you here. Thanks very much for being part of this event at the Global Leadership Summit. I want to just throw it open with, and get your perspective. Am I correct in saying, financial access to financial products at this level of GDP per capita? Vikram, why don't you start? Have you seen this anywhere in the world? You have a bird's eye perspective.
So I know there's this question about where we are on this journey, but I think it's still worth reminding us just how far we've come. So if you look at the Indian markets, 25 years ago, this is when you had Gladiator in the box office. India had a collective market cap of $160 billion. Today it's 5.2 trillion. It's gone up 33-fold over that period. And it's been the best performing market in the world in dollar terms over that period. And actually, by the way, over the last 5 and 10 years, it's been in the top 3 performing markets in the world in dollar terms. So we've come a long way. It's like that old cigarette ad. However, when you think about where we have to go from my perspective, and it'll be interesting to see what Mark and RG have to say as well. I think if you would think of this in terms of an old 5-day test match, we're probably at lunchtime on the first day. Right? And the reasons for this are pretty straightforward. It's some of the things you talked about. There's 3 factors. One factor is the addressable population. And like you said, there's about 1.2 crores of individual IDs with the demat accounts. But when you look at what that translates into as a proportion of the...
Sorry, that was 12 crore. 12 crore unique investors and 20 crore demat accounts.
Correct. But when you look at the addressable population, let's take consumer discretionary as an example. Typically, depending on what you're talking about, it's something between 20 and 30% of the population. So you've got a long way to go when you think of our population at 1.5 billion. The second factor is per capita income is still growing, 9% a year, somewhere in that ballpark. And then last but not least, when you look at a share of equities as a proportion of household savings, before COVID, we were sitting at 4%. Now, what is it? It's about somewhere in the ballpark of 7%. If you look at markets you can benchmark yourself against, it's anywhere from 25 to 45%. So you take all those 3 factors, all of which are growing, put them together, and you can see why I'm saying we're at lunchtime on the first day of a match.
Lunchtime. Have you finished lunch or are we still having lunch? Before lunch, after lunch. Lunchtime on the first day of a 5-day test match. Yep. That's how you'd put it.
Yep.
That's, I think, a useful way to think about this in terms of where we are. Arjun, you want to come in? What's your perspective?
No, absolutely. And I would tend to agree in terms of Vikram, in terms of really believing India is truly at its infancy in terms of financial development and overall potential. I think NASDAQ, coming from where I sit, we sit in a very unique spot in the ecosystem because I think most people here probably know NASDAQ as the big market in the US, one of the bigger exchanges globally, always technologically innovative. But what many people don't realize is we get to supply technology to over 100 markets around the world as well. And really many parts of that ecosystem, whether it be exchanges, banks, broker-dealers, asset owners, you name it, we're sort of involved. And so we get a good perspective on these things. And I can say with confidence, based on many of the markets that I deal with in Asia and Asia Pacific, that the potential here is unmatched, in my opinion, both from a demographic perspective, but to what Vikram was saying, while those numbers are large, as you mentioned earlier, it's still a small percentage of what's possible. And so when you think about that opportunity and what Mr. Kamath was just mentioning earlier, if you make the right investments now, the world is your oyster, I think, here in terms of that.
There is, of course, household assets shifting to financial assets, that is one. But of course, the other one is the country getting richer, which is what Mr. Kamath was referring to as well earlier. Mark, your own thoughts on this question. Where are we? You guys are here and you have big plans, and we'll talk about that in a bit from now. But just the first basic sense of where we are.
So first, I'm going to have to apologize. I talk in billions and I can't make cricket references because I'm French. I would say that coming from global markets to India, the state of development that you have in the industry is incredible. I mean, you've got 1.4 billion people with Aadhaar. Operations, UPI operations per month, which means people can pay extremely efficiently. And then you've got the accounts aggregator frameworks, which enable to track everything. From a wealth manager perspective, this is all great. It helps you to build a better business. I would say that the innovation now needs to come in how you link it all together and how you create the platform and the systems to make sure that the customer journeys that you offer to your customers are happy journeys. I think there's a lot of work that needs to happen there. And this is where a lot of the innovation will happen.
I mean, it's just a question to any of you who, I don't know who wants to take it, but is at this level of per capita, usually, I mean, I've read research, etc., which says that, you know, all of this starts at about $5,000 plus. At this level, I mean, is there a risk of over-financialization in that sense or no? Not at all. No one wants to take it?
I mean, I personally think it's all relative, right? You know, in terms of, you know, where you stand. I think there's always potential. I think the key is that the trend is towards more consumer savings and ability to, and discretionary spending, right? And what you do with that sort of amount. And I think if you introduce the right guardrails and the right structure, as Mark was mentioning, you can take advantage of that. I don't think there's really a risk of overly doing it at this point. I don't know if you agree, Mark.
I think that I would look at it differently. I think you need to take a look at it from the perspective of financial inclusion and wealth inclusion. India has achieved, with the numbers I mentioned, financial inclusion. Wealth inclusion is still not there. And that is where a lot of things still need to happen.
Let's talk about what each of you see as the next frontier of, I mean, what needs to happen here? I mean, we have the rails on which financial inclusion has happened. For wealth inclusion to happen, Mark, why don't you go first? What needs to happen from here?
Yeah, so I can draw a parallel with some of the markets I've had the privilege to work in, and how you move people from being savers to investors, and it's a multi-pronged approach you need to have. So, you know, to simplify it, I would say you need to have the technology. Part of the technology is here, but you need more technology. You need to have the products, and when I say products, there's a complexity because it's not only the investment products, it's also the digital product, which is the whole customer experience. People don't relate to a financial product, they relate to an experience. And then you have the education, which is extremely important. I would say, if you take a look at today, the state of literacy, financial literacy, there's progress that needs to happen globally, but I think India, you know, is part of that story.
You know, just to press on that point, Mark, when we talk about, you know, we speak with wealth managers, etc., all the time, and you get the sense, well, you know, it's you know, the client out there already has, every client has a, so, and yet there is so much excitement and people are, and it's a booming industry. Just your, I know you have strong thoughts on this, but go on.
Yeah, so wealth management, I think, needs to be defined properly first. There's so many versions of wealth management, and you can't talk about wealth management without looking at the individual segments. Wealth management, so first of all, the word wealth can be a little bit controversial sometimes. Wealth management should be for everyone, okay? The democratization of wealth management is something that should happen very often, and I think when you take a look at the state of the wealth management industry in India, it's a little bit of an elite. So there's I would say, a few thousand families that have access to a wealth managers. Wealth management can include elements of advisory, so you know, investment advisor. There's elements of succession planning. There's all sorts of different things, and depending on the segment you look at, the needs and requirements will be very different. At the basis, I would say wealth management should be advisory, fiduciary advisory for everyone, whatever your level of assets. And this is where I think a lot of innovation still needs to happen here, because there is these few thousand families that have access to a wealth manager, someone that will talk to them and guide them. And then there's the next 100, 200, 300 million potential clients that actually are in a little bit of a void. They don't know what to do. They need that guidance.
But is there a way to make, I mean, is it a profitable segment as well? Maybe, or you think technology enables that, Mark?
I want to make sure that we all have a chance to speak here, but yes, there is a way. We've seen it happen over and over, across the world. It takes time. It's not something that happens immediately because of all of what needs to be built. The technology is fundamental. So if you think of a traditional wealth management model, it's a pretty high touch model. That model is very, very difficult to implement if you have clients which have a lower base of assets. That's just a fact. It's mathematics. But you can, through technology, replicate that. You can develop the systems that will enable you to manage a portfolio, to check on the suitability on a continuous basis, to basically do everything that the person can be doing, but at scale. This is the big developments that need to happen. We've brought our platform, Aladdin, here in India, which can do just that.
And let's just take that technology point forward. And you work with financial institutions and banks and I mean all kinds of companies here in India and provide technology, right?
Yep.
Even regulators, as we were discussing earlier.
Yeah. So to your point on what we think is next for a market like this, NASDAQ, when I mentioned earlier, we support over 100 markets globally. We look at those capital markets really similarly across in terms of our overall strategy, right? We think there's three core pillars to what facilitates good capital markets. First is liquidity, right? Which you all said, I think there's opportunity here. Just simply the numbers you presented earlier, the liquidity will come. But secondly, you've got to maintain trust and integrity in the marketplace. And how do you do that? Building trust, building safety, building those guardrails in place, putting technology in place to ensure that every part of the ecosystem is comfortable that their money is going to be safe, it's going to be investable. Really all parts of the ecosystem feel that way, are super important at this stage of India's development to succeed. And then lastly, once those pieces are in place in terms of liquidity and integrity, is maintaining transparency across the platform, right? So whether that's through good risk management, through good surveillance, all those things that the regulator will ask for, or the wealth managers will ask for, or the investors themselves will ask for. We look at all capital markets in that lens, and that's sort of both in the markets we operate, as well as the technology we provide to the capital markets we support as well. And I think that just builds off of what Mark was saying earlier. If you put that right technology in place, everything else sort of will be facilitated
So that's
from there.
my point, right? I mean, liquidity is there. I mean, there's enough, global companies want to come and list here. I mean, just to use that as an example of the liquidity and the deep markets that India
Absolutely.
has.
Yeah, the opportunities are going to be there by
it's
default
there.
here in India.
So on technology, I mean, where are we? Since that's what, I mean, NASDAQ markets.
Yeah, I think India's at an inflection point in a lot of ways, and I think some of the other panelists earlier sort of alluded to it, whether it was Mr. Chauhan at the NSC or Mr. Kamath just here before. There's so much potential here right now, and obviously India has always been a center of excellence in terms of technology and innovation as well, in terms of the talent here. And so I think right now what the risk is, I think you need to make sure you learn from other markets as well. Look at other markets that have been successful globally in terms of similar capital market structure that you want to achieve, and follow that. Don't necessarily try to just build it from internal within India. That goes a long ways.
Yeah.
But as far as looking elsewhere to sort of see best practice, I think will help take it to the next level.
And the other third thing that you mentioned, of course, is safety, right? I mean, all the investors who are accessing financial products, you want them to stay once they are here. I mean, you don't want them to go back because of some, some safety issue or some.
Yeah,
but
I
we've
think-
not had those for a while here in India in that sense, right? At least.
Yeah,
the
no,
regulators have
absolutely.
ensured that.
I think the risk in many of these emerging markets and growing markets is that you have so much excitement and potential that you're eager to get these new products out, you're eager to get new opportunities for retail customers and investors out there. But you do that, and the one time you have a major scandal or a major scam or a major fraud, you go back to zero, right? One step forward, two steps back. So that's the sort of thing you want to learn from other markets that have gone through that. And try to avoid it as much as possible. Not always going to be possible to avoid everything. But again, just putting those little guardrails in place, the framework in place so that everyone's comfortable that, okay, great, we can check the box, we're ready to move forward in a very fast manner.
Vikram, your thoughts?
I'd actually double down on that. I'd say the bedrock is trust and confidence in financial markets. And over here, the regulators have an absolutely critical role to play with that. And then the second is look, there's going to be lots of hard work in terms of building the plumbing. So you have inherently, intrinsically untapped appetite. You have confidence in the markets. Now it's a question about taking that and transforming that into inclusion and wealth creation. Now, and as part of that, again, coming back on the issue of pockets with products, I think your previous guest, Mr. Kamath, had it right when he was talking about things like REITs and InvITs. So the collective market cap, it's an early stage in the journey, about 8 years now, I think. Collective market cap of $23 billion. Little Singapore has got a collective market cap of $63 billion for REITs. The US is 1.4 trillion. So the resting place is somewhere in between, but a long, long way to go.
We have, I think, now 4 listed REITs. Maybe there are a bunch more coming. So it's like a space which is exploding. In terms of products themselves, Vikram, you have which of the products really, REITs and InvITs is of course one. There'll be financial innovation in a big way as well. Maybe you don't want too much of that. That on the other end is also an extreme. Do you think we have enough of that already here?
There's areas that I think we can deepen. Like the corporate bond market is shallow. There's been a regulatory debate about thinking about that. We talked about REITs and InvITs, fractionalization of shares, tokenization. These are all things that will come with time.
On financial sort of innovation, any thoughts?
Yeah, look, I mean, very similar, right? I think NASDAQ tends to try to lead the globe if we can in terms of innovation on markets, right? And so tokenization has been announced by NASDAQ, and that's coming in terms of tokenizing all equities, for example, making it easier to settle and clear potentially down the road. Extending trading hours, for example, 24/5 trading. Again, for investors in India that are sort of coming into the market, being able to trade global markets seems like a simple idea, but it's not that possible right now, right? And so things like that, digital carbon credits, all these types of topics are very, very appropriate right now, and all things that NASDAQ is focused on at the moment in terms of just being able to facilitate not only in our markets, but making sure that other markets are able to offer them when they like to.
Mark?
So again, I'm going to go back to what I was saying before about the dual level of product. You've got the digital product and you've got the investment product. The digital product is all about the client experience. And the client experience today is the app. And so I think that a lot of the innovation is how you take what we said at the beginning, all of these different components of the financial industry here, the digital financial industry, and combine them to make the shortest, most efficient potential journey for your clients, for them to have a good experience. That's how you actually get them to adopt your digital product. You need to provide them with all the tools. You need to have the systems behind that, and that's all part of what is in the package. When it comes to the financial product, I would turn to, again, like the German market, which went through the same transformation, or the Italian market, which went through the same transformation, where the success of the investment product was all about low cost, ease of understanding. If you translate that into financial terms, I would say it's the portfolio at the center and index at the core. And so the way to look at this is to say, look, we are moving from a world where people, and this is still the case here, if you take a look at the asset management industry, if you take a look at the way the products are distributed, there still is a little bit of a product push. And you realize that, again, your clients, your potential clients, can't relate to these products in most cases, which is why you have 1.4 billion people in India and 55 or 60 million mutual fund investors. So what you need is you need to move away from that, and you need to think, how do I communicate with my clients? How do I educate them around what their needs and requirements, how they should think about goals? How do I map those goals to a financial product without talking to them about a financial product, which is then, again, all part of the experience. And I think a lot of the innovation comes in terms of how you message these incredibly complex financial concepts, which everyone here understands, but most people on the street don't. That's a lot of work, a lot of hard work, a lot of education that needs to happen.
Do you think costs are too high, Mark? I mean, cost of financial products, cost of access to financial products. I mean, what you're paying for is fees, basically, across a range of instruments.
I think that a lot of markets have responded to that question with the concept of value for money. Cost is I don't think it's the right concept. I mean, what is it you're getting for your money is a much more interesting one. I have, again, I have the privilege of working with a very large Swiss bank where you have that segmentation between mass affluent, affluent, and then HNI. And the way they deliver the products and the products they delivered was, of course, extremely different. And you realize that even for the HNI segment, the value for money concept applied, because a lot of the portfolio in the core asset allocation actually moved to very efficient, model-driven, index-driven asset allocation. And that is, again, the concept of value for money. You can achieve exactly the same outcome as you would. You can achieve the same alpha through an asset allocation. So the fundamental active equity products that they were buying through an advisor at pretty high cost, you realize that you can get the same value for less money. That's how I would respond to that question.
Sorry, Ajay, you want to say something? We're out of time. Vikram, you've been here, what, 4 months, 5 months?
That's about right. Yeah.
I mean, you want to just, as we close out, what is Bank of America? I mean, goals you're setting for Bank of America here in India from here out.
So I think the first thing to emphasize is that while I might have been here for 5 months, the firm has been here for over 60 years and has got very, very deep roots in the Indian markets. And we operate across our entire spectrum of businesses, and we grow rapidly and profitably. So then if you take a step back, the reason I voted with my feet and came back home is because this is a strategic priority for the firm. We intend to grow substantially going forward. And the team and I want to make India a really important part of the growth narrative for Bank of America. And I'm just excited to be here and happy to be here.
We're excited to have you here. And I hope this is the first of many. Vikram, thanks very much for being here. Arjun, great to have you with us here. Mark, thanks very much for being
Thanks
here
so much
on this as well. Appreciate it. Thank you. Thank you, gentlemen.
Thank you to our panelists as well as Prashant. But stay tuned as we decode who owns the future of money in just a while with Forum Mehta, VP and Head of International Cyber Risk, PayPal, Harshal Mathur, CEO and co-founder Razorpay, Dilip Asbe, MD and CEO of National Payments Corporation of India, and Amitabh Malhotra, Vice Chairman, Capital Markets and Advisory, HSBC India. That in just a bit.
And here's what's interesting. While retail investors are discovering equities and mutual funds, a different kind of money has been quietly reshaping India's landscape. Institutional capital is flooding into hard assets, grade A office space, industrial parks, data centers that didn't exist 5 years ago, but can developers actually deliver what they promise? Can they navigate approvals that take years? Can they hit the yields that justified these commitments?
Our next panel examines what's actually working and what isn't. The conversation will be led by Surbhi Upadhyay from CNBC TV18. Joining her for the discussion are the leaders building and financing these projects. Aditya Veervani, Managing Director, Embassy Group. Arpit Agarwal, Managing Partner and Head, India and Middle East Infrastructure at Brookfield. And Sriram Khattar, Vice Chairman and Managing Director, DLF Cyber City. Please join us in welcoming them all to the stage.
Over to you, Surbhi.
Good afternoon, ladies and gentlemen. What a pleasure to be here with people who are talking about the real deal, right? Hard assets. Just when you thought they're out of fashion, well, think again. So I want to start by throwing some broad numbers to set the context for our audience over here. And these have been taken from various estimates, whereas various industry bodies, CII, could be Knight Frank, could be JLL. So just bear with me on the numbers because they really define what we're talking about over here. Now, the total size of the Indian real estate market at present is under $1 trillion, to be more precise, $0.3 trillion. Now, CII expects that this sector can scale up to $5 to $10 trillion while we get to Amrit Kal, that's 2047. Not just that, in terms of GDP, right now, the Indian real estate sector roughly between 6 to 8% of GDP. And again, by 2047, the potential is that it starts contributing anywhere between 15 to 20% of GDP. That's a huge leap. Now, that's on one side. What's also interesting is the institutionalization and the formalization of the infrastructure and real estate landscape in this country. So REITs and InvITs, young products, barely a decade old, but the numbers are growing fast. So I'll just leave these numbers with you as well. The combined AUM of REITs and InvITs has grown to just under 100 billion in FY25 versus just about 42 billion in the COVID year 2020. Just imagine the leaps and bounds real assets in this country are really seeing. So that's what we want to debate and discuss. How much is real? Is there an element of hype? Can the prices sustain, and can the demand sustain? So let's start with some opening thoughts from our panelists. Mr. Khattar, we all know, we spent the last, I think, 15 months or so, reading about those high-ticket luxury apartments, which were selling off in, less than like 5 hours, or was it 24 hours, right? So it's been a red hot last 24 months for real estate activity. Tell us more.
So I think the Indian residence owner is getting far more discerning. He can afford much more. But the level of aspiration is rising very fast. So once you give a product, it's not only walls and rooms that you're giving him a complete experience and a feel of luxury in that experience. And I think that's what's doing well.
Okay. Why don't you, fill us on this, Aditya, your own experience in terms of what has changed the pace of growth and where exactly are we in the cycle? The cycle started just after COVID, right? And the usual wisdom is it's a 10-year cycle. Tell us if you agree or disagree and where we are.
Well, the housing cycle started right after COVID, but I think the commercial cycle has been going on for a long time. And I think you really have to look at it two ways. In one way, the market seems so hot. All the developers are releasing record numbers, but we still sell only 6 lakh homes in a country of 1.4 billion people. And if you think about China and where China was, each developer there does 50 billion of sales. Our overall 6 lakh homes, 1 crore home on average is 70 billion. So our whole industry is almost what China is doing today with one developer. So I think the scale of it is immense. So in one breath, it seems like